This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
Have we achieved a soft landing? Has the Fed kind of done its job?
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Fears over a broader regional war in the Middle East.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Sweeney out. Rumored he's on the Gulfstream. Maybe we'll see him on Tuesday after Martin Luther King Day. Of course, a hugely busy Monday. We'll tell you about the inauguration. Joe Matthew and Katy Lyons driving that forward. Damian Sassower in for Paul Sweeney, lifting the market. Why did the market go up yesterday, Damian?
I don't know why it went up. I mean, we had, I guess, we really, if you look at retail sales, the market really did, it looked right through it. And I think people are looking through to Davos next week. People are looking through a Trump inauguration on Monday. And it's nice. We get MLK Day. Are you working on Monday?
I thought I was, but I guess I'm not.
Really?
But I'm always, I'll be home.
I mean, yeah.
I'll be tuned in. The market went down yesterday, but it felt like it went up. And, of course, we've got that again today with futures up 14. And I'm sorry, it's earnings. Gino Martin-Adams is having a hell of a couple days here. The bank earnings
earnings
the
were
luxury
great.
earnings
Luxury out of Europe was
out.
great.
And there's just sort of there's this effervescence, I would say.
I would say so. Looking ahead to Netflix next week also. They have some earnings coming out there. We get the big ones coming out toward the end of this month also.
We'll talk about a bracket. We end the show this morning with an extended conversation with Ian Bremmer. We will begin the show in moments with an extended conversation with Wei Li of BlackRock. Yep. For Global Wall Street, she has been lights out on the risk-free premium, and we're going to dive into that mathematics here on a frigid Friday. We say good morning across the nation and your commute. Good morning on YouTube. Got a briefing on YouTube yesterday. Good morning, Philippines. Good morning, Indonesia.
Okay.
Good morning, Australia.
Okay.
The YouTube people said it's unreal.
Well,
the numbers out of evening Asia.
Well, it's interesting because we have Joanna Chua, who runs Asia for Citigroup on in the morning hour, and it's going to be interesting to hear from her what happened with China overnight. We saw some activity data. We saw them hit their 5% growth target
Was it a fiction?
For full year 2024. I mean, they had a big fourth quarter, up 5.4% year over year in the fourth quarter, and so. I don't know, maybe it's some getting ahead of the Trump tariff, so to speak. Maybe
that's the tune on a busy, busy weekend into an historic Monday. From the Interactive Broker Studios, our Bloomberg Business Flash, he's Lisa Mateo.
All right, ahead of the long holiday weekend, futures point to higher open. Maybe the softer inflation print this week brightening the equity market. The eco data this morning is going to include housing starts. Bloomberg Economics says housing starts likely rebounded in December. The swaps market's also expecting some 40 basis points worth of rate cuts from the Fed this year. Bank earnings, the regionals are reporting. Citizens Financial reporting underlying earnings per share for the fourth quarter. They beat the average analyst estimate. Also, after the close last night, J.B. Hunt, those shares dropping this morning after the transportation and logistics company reporting fourth quarter earnings per share trailing the consensus estimates. Time-wise semiconductor manufacturing shares jumping after the world's largest supplier made-to-order chips forecast sales and capital expenditure for this year ahead of estimates. European stocks on track for a fourth straight weekly increase. And you know what? All those problems in the UK, the FTSE, hitting a record. Maybe
in
that's
the DAX in Germany.
Yeah.
The DAX.
I'm going to say more international exposure, maybe the reason there. Could be a tailwind for now. China's economy growing more than expected, hitting their 5% GDP target. The focus quickly, though, shifting to policy risks starting Tuesday. And right now, the S&P E-minis 16 points higher. Dow futures up 129. The Nasdaq futures 65 points higher. Yields 2-year 422 unchanged. 10-year down to 458. We check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business. What are you laughing at?
I'm laughing at you, John. I can't help myself.
Oh, thanks.
You're just so cute.
Well, like I said, he's no Lisa Mateo. John Tucker, thank you so much. Greatly appreciated. This is a joy and exceptionally well-timed. Wei Li is prodigious in mathematics out of her China and, of course, out of University of Cambridge as well. She was a former trader in equity derivatives at Citigroup. You've seen her on the show Industry. Joining us now from BlackRock, Chief Investment Strategist Wei Li. Wei Li, what a tour de force out on LinkedIn on the cash path of the risk premium. I can't say enough, folks, how the partition between the short-term cash path and the longer duration focus of the media, the Fed parlor game, is apt. Wei Li, why should we focus on cash and the cash path?
Absolutely. Good morning. Thanks for having me. So as we think about the increase of 10-year yields, it can be broken down into the increase of cash path and the increase of term premium. Term premium increase doesn't have to be negative for equities, but the misunderstood fact is that markets look at 10s increasing and automatically expecting equities to come under pressure. So what I really care about in terms of translating rate moves into its impact on equity is how much of that increase in 10-year yields is driven by cash path. And so far, not a huge amount, some of them, but not a huge amount.
Right.
80%, more than 80% of the increase since the September lows in 10-year yields has been driven by term premium, which means that equities can still hold up, especially in the face of strong growth.
What do we see, Wei Li, in terms of flows into money market funds? We go 6 trillion, 7 trillion. Do I need to prepare for $10 trillion of money market funds to buttress the cash and the cash path?
Well, right now, there is value to seek income in the front end of the curve. You get income, you don't take a huge amount of duration risk. I can absolutely see why flows are going into money market funds. Now, having said that, so far this year, we got a flavor of how long end repricing can quickly steepen the curve and potentially make duration attractive down the line. We expect yields to push higher still, but at some point it will get to a level that even we would find it attractive. You know, we think terminal rates settle round about 4%, term premium fair value round about 100 basis points. You add the two together, 5% 10-year yields could look attractive. We're not there yet, but which is why we're currently underweight U.S. Treasuries.
Wei, thanks so much for joining us this morning. I am such a huge fan, and we're both believers in the higher for longer narrative. With everyone so focused on rising real yields and stable break-evens in 5s and 10s, I have to say, I think they lost a little bit of track of the inflationary pressures emanating from the front end. And I'd like to hear your thoughts about this week's sharp turn lower in real yields, not just in the front end, but along the whole curve. Is it durable, and where do you see U.S. growth expectations settling here?
We expect U.S. growth to be in the mid kind of 1.5% real growth for 2025, which is slightly lower than consensus, but resilient, certainly strong, with potential to the upside, depending on the fiscal side of things. Now, having said that, yes, we have seen wild swings in inflation expectations so far this year. You talked about the inflation print this week and its impact on break-even pricing, but let's extend slightly further back to last Friday. We had NFP. Headline job creation was slightly stronger than expected. Wage was well behaving, and yet markets were immediately reading into greater job creation, higher inflationary pressure. So even though I had the view of high for longer for a while, I didn't think that represented additional inflationary pressure, and yet markets are very, very quick to swing wildly in between narratives. And I think this is going to be a hallmark of 2025, because we don't have a firm anchor, and markets are trying to fit structural forces, structural patterns into a cyclical lens. We're going to have a lot of the macro volatility.
Wei, I know you're an advocate of staying underweight duration in the current environment, and I loved your chart on LinkedIn where you compared index yields versus duration. But I wonder if you could expand on that a bit, because look, staying underweight duration in U.S. Treasuries, while that's cute, not John Tucker cute, but cute nevertheless, building short duration exposure in high beta asset classes like credit or mortgages, that could prove interesting as well, no? So I'm just asking, from your clients, what are you seeing? I mean, where's the best risk reward for hawks like me who prefer to remain duration light?
Front end of the curve right now we favor, and we also like investment grade, but short duration investment grade. The spread of high yield is a little bit more interesting than an IG, so we can term out a little bit in high yield space, and value can be found in European credit versus their US counterpart. So this is where we like for kind of income within the fixed income space, but we are 2 out of 3 overweight in US equities on a scale of -3 to +3. So that's quite overweight in US equities, despite the volatility that we have seen so far this year. You look at the drivers of earnings, Magnificent Seven, they're net negative in terms of net debt. They're negative in terms of net debt. So they're quite resilient in the face of rate volatility. So we continue to see US corporate strength carrying us through.
Right. We continue with Wei Li of BlackRock, Ian Bremmer to be with us in the 9 o'clock hour, Katy Kaminski, Jim Caron, Carl Weinberg in the 8 o'clock hour. An extraordinary surveillance this morning. Good morning on your commute across the nation. Particular good morning to 99.1 FM, preparing for an Inauguration Monday. I'll give you details on our commitment to that. You'll see that Monday from Joe Matthew and Kaylee Lines. Good morning on YouTube. It is the best way to get us, particularly across the nation and internationally. After your commute in the BlackRock office, consider YouTube. We continue with Wei Li. Wei, one of your great themes, which frankly I endorse, is that we're not going to do a simplistic revert to the mean attitude. There's a feeling, to give John Williams just due, that we go back to 2%, we go back to trend, everything is pre-pandemic nice. You forcefully push against that and look for a reset higher. How do equities reset off the fixed income new reversion to the mean?
One way to look at it is indeed rates are resetting back to the high for longer than equities need to reflect that reality, that new rate reality. One measure, so to your point, Tom, around mean revert, one measure that I get quoted back to me constantly is Shiller PE, that it is at the 3rd highest level ever on history, just after global financial crisis, just after the end of 1920s, roaring 20s. Right now, Shiller PE is 37 times, and that is indeed quite stretched. But if we were to put consensus forecast for earnings as backward realized earnings for the next 10 years, then Shiller PE becomes 17 times instead of 37 times. So all of that just to say, in the face of transformative forces driving economies forward, driving earnings forward, especially tech, and as that broadens out to the rest of the economy as well, the earnings wouldn't look as stretched. So I cannot agree with you more, agreeing with me that mean revert is not the playbook.
I think it's too simplistic. And folks, this goes back to a paper by John Campbell and Professor Schiller of Yale University, who everyone knows I adore. This is back, I'm pushing 40 years now, before Wei Li was born. And the answer, Wei Li, is if you look at Campbell Schiller, they don't really model in a technological shift, a productivity shift. Are we pricing in the present productivity and our present new technology? Is that our great misjudgment?
I think that is starting to be priced in, but depending on the ultimate magnitude of productivity boost, there can still be further upside, especially because right now, in terms of the economic data, yes, we see sector-specific productivity gain, but we have yet to see economy-wide productivity gain being definitively driven by AI. So the upside is still there. And currently, literature review has a wide range of productivity boost, somewhere between 0.1% per annum to 1.5% per annum. So that's a wide range. There is certainly more room to surprise to the upside. In our assessment, we're still in phase 1 of the AI revolution. Phase 1 being the build-out phase. Then we have phase 2 being the adoption phase, where we're expecting use cases to really broaden out across sectors, and phase 3 being the productivity boost, which will take time.
Wei, we're 3 days away from Trump's inauguration, and everyone knows that the U.S.-China relationship is front and center. We saw some activity data overnight. We saw them hit their 5% bogey for full year 24. Talk to us about 60% tariffs on China. How does dollar yuan react? And more importantly for me, as the emerging market strategist here at Bloomberg Intelligence, what does that mean for the broader Asian dollar bloc? I mean, can we expect Asian currencies to depreciate over the next quarter, let's say?
I think all else equal, greater tariffs leads to weaker currencies, which is why the yuan has been under pressure so much so far this year. And more broadly, tariffs concern is why, even though data from China is stabilizing and overnight data particularly was reasonably resilient, markets don't seem to care. Markets don't seem to care, and investors don't seem to care. One little known fact, I was looking at it at the end of last year, just reviewing yearly performance. In dollar terms, Chinese equities and Chinese government bonds outperformed their U.S. equivalent for the year of 2024, but investors don't care. Plummeting bond yields in China shows that investors are really worried about decades of deflation doom loop. So I think this is really a sentiment and confidence game at this point.
Right. I mean, this is great. We could go for 4 hours with Wei Li.
Let's do it.
Are you going to give her a co-write on your morning note?
Well, me?
Damian Sassower.
I mean, look, I'm not going to write my note until this weekend, but Wei, you're going to be front and center. I mean, I have to keep going here. I mean, for me,
please,
how do you not ignore the fact that once the PBOC starts allowing the yuan to kind of float up to 740, 750, that you're not going to see some spillover. We just saw the Bank of Indonesia cut rates and look what happened to its currency. We're at an all-time low relative to the dollar. I mean, can we expect the Korean won, the Indonesian rupiah, the Philippine peso, are they all going to start testing lows versus the dollar? Is this going to be a regular occurrence for the next year plus?
Well, what we have seen so far after the election is that the dollar has been very, very strong. But I would say, though, for the entirety of the first Trump term, dollar actually hasn't been that strong. So it rallied into inauguration and starts to kind of go sideways, right? So I wouldn't necessarily extrapolate the dollar strength indefinitely from here on. And also as we think about the goals of the Trump administration around kind of stronger growth, lower inflation, lower deficits, and lower immigration, there is a market-friendly way of getting there, and there is a market-less friendly way of getting there. So depending on which way we are gravitating towards, it has significant read across to the dollar for sure, to U.S. equity sentiment, to treasury yields.
Wei Li, thank you so much. Across the nation, on YouTube, worldwide, Wei Li of BlackRock. Greatly appreciated this morning. Futures up 20. Some really that was a clinic, folks. Having Damian and Wei Li go at it on the Pacific Rim and on this dollar strength that we're seeing. Speaking of strengths, the Lions have a football game this weekend. With our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, John. Israel's Prime Minister Benjamin Netanyahu announced that an agreement with Hamas to pause the war in Gaza has been finalized and is set to begin on Sunday. The truce includes the release of 33 hostages, Israel's withdrawal from populated areas of Gaza, and the freeing of around 1,000 Palestinian prisoners. In the Israeli-occupied West Bank, Palestinian political leader Mustafa Barghouti welcomes the ceasefire agreement for Gaza.
Finally, we have an agreement. It's a big relief for especially the population of Gaza. We're talking about 2.2 million people who are taken hostages practically by Israel. They are suffering from starvation. They've suffered huge losses.
The ceasefire is backed by U.S. President Joe Biden and incoming leader Donald Trump and is seen as a key step towards calming the wider Middle East. With the TikTok ban now just days away, many are wondering what will happen when the clock strikes midnight Sunday. The app is home to about 170 million American users, including this man who makes videos about New York City. He's skeptical of the government's reasoning for banning TikTok.
This is all a ploy by senior citizens that run our government to make us believe that they know better than us, when the reality is the world doesn't necessarily align with their boomer opinions.
The ban came because of security concerns about the Chinese-based app. Fire crews still working to contain the fires in the Southern California fire zone as residents are looking to rebuild. Authorities are reopening some areas for residents to return to. The fires damaged or destroyed at least 12,000 homes and other buildings, including 10 schools, and killed at least 27. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, John.
To me, it's like the baseball playoffs 3 out of 5 series. This weekend is maybe my most fun weekend of the NFL year as well. Let's talk about a game. A lot of people, there's going to be a small match in the snow maybe in Philadelphia this weekend.
Oh, my goodness gracious. This is, let's put it this way. This game, then with the Baltimore game, then you got, of course, the Lions game and the Bills game. I mean, this is.
I like the Rams in Philly. I know they're from LA, but I actually think the Rams surprised there.
Are they motivated by the horrific disaster that is LA County right now? They got to be.
You know, I never even thought about that, but you're right. They're playing for something. I mean, we all are, but you know, you can convince yourself. But I got to say, I like the Rams in Philly. Buffalo, Baltimore is going to be.
That's going to be a heck of a game.
Yeah. So I don't need to watch the Lions. I can just focus on Buffalo and Baltimore. Okay. We'll have to see.
We're excited about the Lions.
Well, we're excited about a lot of things. It's a really power-packed Friday here, folks, as we get to the inauguration on Monday. We'll give you details on that here in a moment. We're out on YouTube. Subscribe to Bloomberg Podcasts, growing each and every day. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash ahead of the cash open on Wall Street futures, pointing to a higher open after yesterday's declines. Some earnings shown Schlumberger shares up over 2% pre-market. After the oil field services company reporting adjusted earnings per share for the fourth quarter, they beat the average analyst estimate. And also some of the results from the regionals, Truist Financial, the ticker symbol TFC, reporting net interest income. It was broadly in line with estimates, but they gave a tempered projection for the first quarter revenue. Right now, the S&P E-mini futures 22 points higher. That's up 0.4%. The Dow futures up 167 points. That's a rise of 0.4%. NASDAQ futures up 96 points. Now that is up 0.5%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Damian and Tom.
John Tucker, thank you so much. Damian Sassower and Tom Keene with you this morning. Huge response to Wei Li, and we continue with excellence. Now, Joanna Chua joins us, head of, to say Pacific Rim and chief Asia economist at Citigroup, barely describes her competency out of the Philippines and out of a small school on the Charles River in Boston. Joanna, thank you so much for joining us in your late Asia Friday. An important conversation. Joanna, if China had ticked it to 5.5 or 5.6, we'd be talking about 6% Chinese growth. And I got a paragraph telling me consumption's below pandemic, property investment we all know, and deflation persisted. Where is the 5% growth coming from in China?
Well, if you look at the data that surprised recently on the monthly high frequency, it was industrial production. I mean, the reality is China has been very, very competitive and producing a lot of globally demanded manufactured goods. So I think net exports have clearly been a big contributor to GDP growth. as well as the resilience in some of the manufacturing investment as well. So you're absolutely right. It's still a very unbalanced growth story. And that's part of the reason why for the second year in a row, you pretty much have deflation.
What is the next?
So the question going forward is whether this can continue.
What is the next step for Beijing? What is the sequence that Citigroup sees that they will do to spur or goose consumption?
Well, we've already gotten a preview of that, right? So since the policy pivot in September and all the policy announcements and the Central Economic Work Conference, clearly there's more concerted effort now to try to lift consumption. And we had a little bit about that with the broadening of the consumer trade-in program. There was an announcement on December, just very symbolic, about a salary hike for public sector workers. And also we're expecting targeted cash transfers. So a lot of these details are not going to be unveiled until March NPC meeting, but our expectation is there's going to be more additional stimulus. It's not going to be a big bazooka. It's still going to be reactive, given that, they still need to buy their time. So we're expecting an additional 1.8% of GDP stimulus. And the composition of that will be a little bit more towards consumption. And the expectation is going into next year, that will help drive a little bit, it will contribute a little bit more to the growth. But unfortunately, it's not going to be strong enough to offset some of the headwinds we're seeing on the net export side, on the trade policy uncertainty that is translating to a slowdown in manufacturing investment. And I don't really think we're expecting the property market's going to stabilize anytime soon in China. So that will still act as a drag, although less of a drag than it had been in the past. So overall, next year, we're expecting China growth is going to slow. Sorry, not next year. This year, we're expecting China growth to slow down to 4.2%.
Shohana, you oversee all economic research in the Asia-Pac region. That's 13 economies. And I know they're all different, but, I just have to ask you this. We are seeing China-U.S. relations front and center here, and we are seeing dollar yuan decline off the back of that. And, we saw the Bank of Indonesia earlier this week cut rates in the face of it all. And, my question for you is, does monetary policy really have the same efficacy in Asia as it does in other developed markets? My guess is maybe not, right? But you are seeing the ensuing impact on currencies. And I wonder, do you expect that to be more of the same?
Well, I think there's been rapid disinflation, not just in Asia, but even in the rest of emerging markets. Asia never really had that much inflationary pressures as other regions. But then even withstand that, over the last couple of months, disinflation has moved a little bit faster. So I think we're in a backdrop where I don't think, with some markets, selective markets still having monetary policy still a little tight, there's obviously an opportunity for them to start cutting, and we've seen that. Obviously, the strong dollar in the past used to complicate the ability of central banks in Asia to ease policy because they were always very concerned about FX volatility and what that could mean in terms of financial market volatility and exchange rate pass-through on inflation. But now that inflation is really inflation risks have receded, I think that we are seeing more room for central banks to cut rates. Now, having said that, we had a mixed bag. We had Indonesia surprise on the market, cutting rates, but then we had Bank of Korea surprise the market and pause. But I think overall, this time around, I don't think what's happening with the dollar and the Fed is significant of a deterrent to monetary policy as it had been back in 2023, because inflation is a lot more muted. And we're on the eve of the new government coming in, a lot of trade policy uncertainty. Asia is a very exposed region to global trade. Yep. So heightened trade policy uncertainty is not going to be good for the region. And therefore, I think central banks have to err on being supportive.
Johanna, I have to ask you this because, we are seeing yield differentials between the U.S. and many of the Asia bloc. I'm thinking Korea, I'm thinking China, I'm thinking Taiwan, I'm thinking Thailand. They are at all-time tights. Yeah. And so, what does that mean for FX hedging? What does that mean for building dollar protection into your portfolios, be it an equity investor or a fixed income investor from the perspective of the U.S.? It means you get paid for dollar protection, right? So talk to me about, your clients. What are you hearing from clients? Are they looking to take advantage of some of these, rate differentials, some of these, big differentials to basically, get a bit of a free lunch here to carry in Asia and Chinese equities or Korean equities on an FX hedge basis? Are you seeing any of that?
Well, no, absolutely. I think we're in an environment where obviously we've had a little bit of retracement of the phenomenal dollar rally that we've had since certainly Trump got elected. And I think there's a bit of a breather a little bit on the back of maybe some of the tariff risk premium is coming off, because some of the noise we're getting out of Trump's administration, Trump's people, is that they're not going to go aggressive or hard right away. It's going to be more a graduated approach, which has always been our scenario analysis. But having said that, the other reason why dollar has been bid relative to some of the Asian currencies is we still have the rate differential argument. We are in an environment where, U.S. economy is quite resilient. We had a hawkish, cut in December. Our expectation is the Fed's probably not going to cut until May. Meanwhile, we have a number of economies in Asia where, again, inflation's not an issue. We've got growth uncertainty. If anything, we're still expecting central banks to still ease, including China, including other central banks, eventually Korea also in February. So at the margin, there's other reasons why dollar Asia may be bid. It's not just the tariff risk premium. You also have rate differential as well that's working in your favor.
Joanna, I got time for one more question. And I'm going to pull an audible here. I know Jane Fraser's listening this morning, so I don't want any pressure on you. Joanna, you own the Pacific Rim with your Philippines. We have an inauguration Monday in Washington. One of the hallmarks of the Biden administration is a reaffirmation of the U.S. to the Pacific Rim through 4 air bases in your Philippines. Do you suggest that this new administration will continue that projection into the Pacific?
I think there will still be an important. Definitely, Asia is still a significant growth region for the world. So it's very strategically important for the U.S. It's not clear to me to what extent U.S. approach to security alliances in the region will be the same as what Biden did. Is he going to have the same kind of multilateral approach of multiple countries, or is he going to be dealing more in terms of bilateral? We have to see. I mean, obviously, there's a lot of things on the plate at the moment. The good news is, although there's been a lot of noise for now coming out of Trump on tariff trade-related noise targeting Mexico and Canada, so far he's been relatively quiet for some of the Asian economies. I mean, it's different. Trump 1.0, there was a lot of worry of Japan or Korea, but this time around it's been a little bit more muted. So I'm thinking, maybe obviously there's a little bit more recognition on the importance of allies and working with allies to secure kind of geopolitical national security objectives in this region.
Joanna, you're a trooper to stay with us late into your Friday evening. Really appreciate it. Joanna Chuad, Citigroup in Asia, and of course on the questions. I mean, there's a multiple set of tension. I mean, the tensions there, given the trade boom in China, evident by 5.4% GDP. I mean, it's again front and center.
I think the gravity of China, there's no getting around it. Even if you're Australia and the Antipodian region like New Zealand, I mean, I think everything is really looking at dollar yuan. That is going to be the huge cross. It's going to drive a lot of the price action, at least here in the early go.
John, we can't say Antipodian. You have to be a Wall Street.
Antipodian? What's the derivation of that?
Antipodian is New Jersey down by Philadelphia.
It's got a lot of legs. It tastes really good with butter sauce.
Can you translate what Antipodian is for those that are not astronomically established?
I mean, when I think of it, I think of New Zealand and Australia. I don't actually know. I mean, I'm a dumb Antipodian. I mean, I like a vinaigrette, or I like to dip it in a butter sauce. It tastes really good with Antipodian.
If you taken the fam to Antarctica, you're the one person I know. Kids who are going to Antarctica. Have you done that bucket list?
No, I've not. I have no interest. It's too cold down there.
In the Antipodian South. Damian Sassower, get out the map, folks. You'll need it for surveillance today. We have a great list. Guess what? This is as simple as this. Monday, 11 a.m., Joe Matthew, Kaylee Lyons, Tyler Kendall, Anne-Marie Horton, gentle and important conversation and coverage of the inauguration of the next president of the United States. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Ahead of a long holiday weekend, ahead of the inauguration, maybe more importantly, futures pointing to a higher cash open. Dow futures up 159, S&P E-minis up 20, NASDAQ futures up 88. Among the most active in the pre-market, shares of Rivian up about 2%. The Biden administration finalizing financing for Rivian Automotive to build a manufacturing plant in Georgia. Among the regional banks, Citizens Financial reporting quarterly earnings. That was a beat, but for the first quarter, they also see net interest income down 1.5% to 2.5%. Volatility index lower, down to 16. Europe, DAX a record, FTSE 100 a record. And antipodes a point on Earth that is directly opposite another
Very nice.
point on Earth.
I was right.
FYI. So I guess we're antipodes to them. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Flash. Damon and Tom.
Thank you, John Tucker. Greatly appreciate that. And for Lisa Mateo for one day.
Oh, no.
Say,
Tuesday, too.
Tuesday, too?
So I'm told.
It's an extended holiday. We say good morning to all of you on your commute across this nation. And now a serious conversation. We're going to talk to Dan Close. He's head of municipals at Naveen, which, if you're taking advantage of tax-free bonds, is arguably the most important job in the universe. Yep. And we can talk about the attraction here and all that's going on. Forget about it. There's a final paragraph in his note, which is all anyone wants to know. Dan Close, my history of California is under duress. They always come back. Is that what Naveen suggests LA County will do?
Yeah, and good morning, Tom and Damian, of course. And of course, heartfelt sympathy to all those impacted by the wildfires. But yeah, that's certainly our supposition. It's not just California, but if you look at any natural disasters and how the muni market reacts, it does always come back. And, you know, here in California in particular, a very desirable place to live. Certainly, it might be a slower rebuild given the insurance market, and you know you need the insurance market to get a mortgage. But if you look at any large natural disaster, this might be as large as a Katrina or a Superstorm Sandy. You know, in each of those, after the massive destruction is done, the federal government does come in, and there is this payment and rebuild effort. If you look at just Katrina, for instance, $125 billion of damage, 1 million people displaced. Within a couple of years, there was $120 billion of federal money that came in. Same with Superstorm Sandy, about $75 billion of damage. The federal government came in for $50 billion. And so I think, you know, even the most recent natural disasters, Hurricane Milton coming through the Carolinas, you know, we do anticipate those full rebuilds. It's absolutely tragic right now, but certainly as far as muni credit goes, we don't anticipate widespread defaults because of it.
Dan, I'd love to stick with Hurricane Katrina here of 2005, because what was interesting there is 2005, the U.S. economy was in a far different place. Number one, the relationship between federal and state governments were in a far different place than they will be under a Trump administration. But more importantly, New Orleans population declined by 50% after Katrina, right? And it still hasn't returned to those levels. And I'm thinking about the LA wildfires, and I'm thinking about migration patterns and where these Angelians are going to head to. And you telling me that they're going to actually be able to wait this one out, the reconstruction of that area, and that they're going to be, willing taxpayers at the end of it all? I mean, is that really what's priced into your model here?
Yeah, if you do look at Katrina, I mean, lost 1 million residents, hasn't yet recovered fully that amount, but the tax base has. And I think certainly for Los Angeles, for Southern California, why the rebuild happens, there's things that California has like hold harmless for student enrollment. So if you're in Pacific Palisades and you've lost your entire school district population, you're held harmless, you're staled out at the 2024 numbers. We certainly think even if there is less population, fewer people able to rebuild, certainly the population of those that rebuild might have to do so without mortgages. Certainly
at a higher rate.
Certainly at a higher rate. But if you look at what happens though, Prop 48 with California, you only have a 1% increase allowable for your property. Something like this, which is absolutely tragic, when you do the rebuild, you do have a re-rack on your assessed value. Do you have the population that comes back completely like New Orleans? You probably don't have as many perhaps that come back. We think fully with time that does get there, but initially, even if the rebuild is slow, we think the tax base, just given the huge size of it, a $1.2 trillion tax base, you should have no disruption to your payments.
Dan, I wonder if you could just shed a bit of light for our audience here. The municipal tax break that borrowers receive from the federal government, obviously the spotlight is on it here under a Trump administration. It would cost states and local governments nearly $824 billion over a decade, according to a new report. Talk to us about, empirically speaking, is there really a risk that Trump's going to, repeal that tax break?
I think anything's on the table. I don't think that the risk, I would say that we've seen numbers anywhere from a 1%, very, very low, all the way up to a 40% chance. We're somewhere in between. I think that for the first time in a very long time, there is a very real threat. I think everyone always assumes, it's just $40 billion a year, it's too small. But to pay for the Tax Cut and Jobs Act, I think certainly anything is on the table. We think that just given its role in infrastructure building, all the rebuild of Southern California is going to be through municipal debt that eventually does come through. But I think there are ways that they're going to chip away in budget reconciliation. We certainly saw it in the 2017 Tax Cut and Jobs Act, getting rid of pre-refundings. If you have private activity bonds, if you're a university with a large endowment, all of that could potentially be under fire. But, as far as getting rid of the only way to build local infrastructure, I don't think so, but certainly it's going to be in the headlines like it's never been before.
Really valuable. Daniel Close, thank you so much at Naveen, authoritative out of Chicago, the heritage of tax-free bonds there on a resilient California. Futures up 20, down futures up 160. The VIX above 16, but what a week it's been, going from a 21-ish down to 16.08 on the VIX. With our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, John. Israel's security captain has convened to vote on a ceasefire deal after Prime Minister Benjamin Netanyahu confirmed an agreement had been reached that would pause the 15-month war with Hamas in Gaza and release dozens of hostages held by militants there. Mediators, Qatar and the U.S. announced the ceasefire on Wednesday, but the deal hung in limbo for more than a day as Netanyahu insisted there were last-minute snags. Aiden Alexander, a dual U.S.-Israeli citizen from New Jersey, was captured by Hamas while serving in the Israeli military. Speaking to ABC, Aiden's father, Adi Alexander, said he feels optimistic and credits President-elect Donald Trump for reigniting talks.
We felt like Trump effect was an effect, and using this deadline, January 20th, it was a good thing, and thankfully all parties pushed forward, and here we are.
If the cabinet approves it today, the deal will then go to the government for a final sign-off. Both bodies are expected to okay the ceasefire, and it could start as soon as Sunday. The confirmation process for President-elect Trump's cabinet nominees' picks are up again this morning. Trump's choice to lead the Department of Homeland Security, South Dakota Governor Kristi Noem, will be questioned by members of the Senate Homeland Security and Governmental Affairs Committee. SpaceX is now investigating the loss of their spacecraft during a test flight yesterday. SpaceX launched the 7th test of its Starship rocket, which it hopes will one day carry people to the moon, even Mars.
4, 3, 2, 1. We have liftoff.
Minutes later, the spacecraft separated from the booster, which was able to successfully navigate back to the launch pad. But the company says about 8 minutes into the flight, a fire broke out and Starship exploded over Turks and Caicos. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Damian, John.
Baltimore beat the St. Bills 35-10 earlier in the season. You too. Damian Sassower, Michael Barr on the Super Bowl that we see Sunday at 6:30.
It's only a 1.5 point spread.
Yeah.
I mean, it's the only tight one of the weekend. I mean, let's be clear. Saturday should be a bit of a blowout central. And if you're looking at some of the Detroit Commanders and the Chiefs-Texans games, those are like 8.5, 9 point spreads. But Sunday, I mean, you get Ravens-Bills, that's a point spread. And Rams-Eagles are under a
Bills
touchdown.
home, does it matter?
Yeah, well, yeah.
I think so. I definitely do. I mean, look, that crowd, and especially if the conditions kind of
19 degrees, 12 degrees low, snow expected.
That's right.
That's a heat wave in Buffalo.
Yeah, in Green Bay, that's like March. Call that. So what are you predicting? Come on, Tucker and I are taking notes.
Oh,
come on!
You know what? I got to go Ravens.
And I'm going to take the Bills just because I'm a New Yorker, and I'd like to see the Bills win it. I'd like to see them get back. But look, I mean, the Bills are the Bills, and the Bills, they fall when they trip over their feet when they get to the finish line. So we'll see.
Gifted analysis. What you turn into Bloomberg's surveillance for Ravens and Bills from New York. It's Bloomberg.
You're listening to Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Greatly appreciate you with us. Of course, Bloomberg Surveillance always brought to you by IBKR. Will the average U.S. temperature in January 2025 be greater than 34 degrees? Not. You can trade your prediction at Interactive Brokers. You can buy yes if you can agree. If you're like me, you can buy no if you don't. Correct answers earn $1. Go to ibkr.com/forecast. Thank you, Interactive Brokers, for that. Doing derivative work in commodities and in weather. It's a big business.
Yeah, big business. I like commodities. I like commodities here. I think they're
Good morning.
Coming back here a bit.
What do you?
What should we talk about?
Great article. I want to talk about China. Okay. World's coming to an end, and they're popping 5.4% GDP. Freya Beamish, who we talked to a couple days ago, T.S. Lombard, she says, okay, it's real, and they're lifting from a 4.6-ish up to a 4.7, and they say, guess what? The multiplier effect is working. What a shock. If you actually have an expert boom, it doesn't fix things, but it just makes it feel better.
I think the policy mechanism is the real key here. I mean, they have shown a lack of willingness to just, I mean, we've learned from Japan, you have to put money, you have to put cash in households' hands, you have to let them spend. And, cutting rates is not going to cut it, Tom. That's just the fact of the matter. Everyone's been telling the PBOC that. But, I mean, what is tying their hands up? Why aren't they doing it? I get the whole point of welfareism in China. President Xi is anti that. But, that's kind of where we are.
Joining us now, our expat correspondent, Kriti Gupta, today from some unbelievable, gorgeous view in Spain. Kriti, let's cut to the chase here. They're done. I mean, Richard Gere moved there. Are you interviewing Richard Gere? Is that why you're in Madrid?
I wish I could say that I came to visit him, maybe a little bit of Enrique Iglesias as well, but I have to say I'm actually here for some economic reasons, Tom. I'm actually doing a little bit of homework.
Okay, well, the homework I see is I got 100% expat tax in Spain. Seriously, Kriti, is the boom of Spain, Greece, and Italy, is it over because there's too many people like Damian Sassower there?
We should absolutely take a road trip and do a little bit of house hunting for all of us. But I think really the story you need to know here is that this is a complete turnaround of the crisis you've seen in Europe, just say 10, 15 years ago. Basically, the kind of black sheep of the European family are now the golden children. It really speaks to this idea that so much of this investment from the fiscal government, but also the wealthiest from around the world have really fled to Spain, to Italy, and that's showing up in things like housing prices and then almost creating a little bit of emphasis on why you have that 100% tax.
One more question. We bring in our Barcelona correspondent. What'd you learn in Barcelona?
So, I was in Barcelona and Sevilla. I skipped Madrid, as you know, Critty, but this is my question for you here. Is there really risk of another European confidence vote, this time in Spain? I'm hearing whispers about PM Pedro Sanchez, the new budget's getting stalled, Catalonia's going to secede from Spain. I mean, is there any truth? Is there anything to any of that whatsoever?
There's a little bit of it, but the problem here is that if not Sanchez, then who? And that's something you're hearing in a lot of governments around the world, that there just really is no alternative, and therefore that almost saves Sanchez's job. But look, I think we're about 1 or 2 years out from that general election. It could absolutely get fast forward in the meantime.
Critty, thank you so much. Too short a conversation. Get back to, she's house hunting there.
She's the best.
Lunch with Richard Gere. I mean,
I'll take a couch. I'll take a sofa in her living room.
Critty Group, to thank you so much. On assignment in Madrid, Spain. There's so much to talk about David Lynch. Afterthought, really, has seen a number of the movies, and it was just great that someone of the younger generation would know of this giant David Lynch. Where did you first see him? Where did you first think about it? And maybe it was a certain song from 1989 where he picked out of nowhere a gentleman named Chris Isaac and said, this song fits Wild at Heart.
Make foolish people. I never dreamed that I'd meet somebody like you, and I never dreamed that I'd lose somebody like you. No, I don't wanna fall in love. No, I don't wanna fall in love with you.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Michael Barr here, getting ready for some NFL football. Huge news day, and Michael Barr working on the death of Bob Uecker, something, of course, we're focused on in all of baseball. Damian Sassower in for Paul Sweeney as well. I thought really that the last hour, Damian, was really a new focus on not a leveling, but at least China that gave us a little bit of economic oomph into 2025.
I mean, if you remember last year at this time, China was off to the races, right? I mean, everyone was talking about the recovery, the reopening. The Chinese equity market was up big, and now we are in a very, very different place. And
place.
The question is, what is the signaling and what is the sequencing? What does the PBOC take away from this, or do they even care?
The VIX 16, we're going to get a 15 handle in a moment. Futures up at 24. Bloomberg Surveillance on this eventful Friday. It's brought to you by Cohn-Resnick Advisory, Assurance, Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. And we thank Cohn-Resnick for heritage support of all we do here on economics, finance, investment, and trend following. Right now, let's sneak this in from the Interactive Broker Studios, the Bloomberg Business Flash, John Tucker.
All right, investors a little more upbeat about the outlook for interest rates. Also waiting the inauguration. S&P 500 on track for the biggest weekly gain since the election. Some of the movers: Applied Materials higher. KeyBank Capital Markets raising its recommendation on the stock to overweight. Fastenal falling. The construction supply company reporting fourth quarter sales. They slightly missed. They blame soft manufacturing environment. JetBlue, Southwest Airlines, they're lower. Bank of America downgrading the carriers to underperform. Truist Financial gaining. The Charlotte-based lender reporting net interest income broadly in line with the analyst estimates. SLB, Schlumberger, the world's largest oil services provider, planning to boost total returns to shareholders 21% this year. And shares pre-market, they were up over 2%. Right now, the Dow futures up 184, S&P E-minis up 24 points, the NASDAQ futures up 114 points. Lunar New Year, January 29th. It is the year of the snake. More than appropriate to give gifts for the year of the snake. And, you know, you heard about the luxury makers, the Legend of Zodiacs, the Snake limited edition fountain pen from Mont Blanc, one of the offerings at only $6,300. I do love my fountain
I just
pen.
lost my Mont Blanc Sgt. Pepper's pen.
You know who's born in the year of the snake?
Yeah.
My wife.
Oh, there you go.
Yeah, I mean, just saying, she's not a snake.
So is it Van Cleef?
But she does hiss sometimes at me.
At 57th Street and 5th Avenue,
Understood.
are you darkening the door at Bulgari or Van Cleef or Louis Vuitton? Where are we going there in the roulette? Tiffany's?
Oh, I don't
You're
know.
the snake.
I'm
You're the type.
not really a. Come
An
on.
important headline,
Simple
folks,
guy.
and it does move the market. It moves the market fractionally, but a decided lift that we see. The Israeli Security Cabinet, they approve a Gaza ceasefire deal. Damian, we've seen it coming, but you wonder how fragile it is.
It is very fragile. I mean, you can't put a lot of stock in it, but I mean, God, I mean, we're fingers are crossed, toes are crossed. I mean, we've got to see something get done here, and it looks like there's a willingness on both sides.
There's a secondary headline. IDF approves renewing train service near Gaza starting February 1st. We'll have much more on that. Look to Joe Matthew, Kaylee Lines for some good coverage of that with David Gura here in the coming hours. This is a joy. Katy Kaminski joins us right now. Thrilled that she could be with us in Boston because she is the queen of the trend and of the effort to extrapolate. Katy, are trends in place right now at AlphaSimplex? Like, do you walk in and say, this is the trend, I got a feeling of where I am now?
They have been until this week, I have to be honest, because trend following has been working very well, particularly in currencies and also fixed income. But I think this week sort of marked a little bit of a shift in sentiment, particularly for fixed income. But the trend in the dollar seems to be very much in place. And that's something that is surprising and exciting sort of to follow.
What's the inertial force there? I'm sorry, Damian. Is it, on the dollar strength, Damian's
I get
going to be
so
smarter
excited
than
when anyone talks about the scope for dollar strength.
But Katy, what is the nature of that trend? Is it a momentum? Is it a bid? Or is it a lack of people pushing the dollar down?
Well, I think, you know, I tend to think about the dollar as having a few key forces. One is monetary policy, another is sentiment, and the third is, of course, growth. And so since we've seen that the dollar has been persistently strong, especially going into the election and post-election, that seems to be a pro-U.S., pro-growth story. Then this month we saw sell-offs in equities, which tends to be pro-dollar as well. And then finally, monetary policy had been a little bit more reticent recently, which is also pro-dollar. But what surprised me is this week, given sort of the shift in sentiment on the Fed, actually the dollar hasn't really wavered. And it didn't waver last month either. So it looks like this theme, you know, pro-U.S. and sort of U.S. dominance is probably one of the stronger themes that we're seeing that's holding through all the noise.
Katy, you're on the managed futures strategy at AlphaSimplex, the global alts strategy also. But let's talk about futures for a second because I need to dial it back to the early 2000s, to my CTA days. I need to think about Campbell, Winton, JWH. You know, talk to me about what the state of the market is now. I mean, those guys are long gone. I mean, we know the macro guys used to frequent that market. You know, the Tudors, the Soroses. Like, who is trading? Who is trend following
so what
today?
You're saying right now, who is the new Monroe Trout?
Who's the yeah, exactly right. Who's taking the marginal risk in futures markets? Who's playing mean reversion, trend, momentum, all of that stuff?
Well, I think there's just been a changing evolution of different CTA players in the space. I mean, if you look sort of Man Group, AlphaSimplex, if you look at the SG Trend Index, there's those are some of the largest futures traders out there. So that has evolved over time. But what's really cool about this space is that the strategies still remain, they tend to work over long horizons. And a lot of the techniques that worked earlier when there were less futures markets are still working today. And now there's more futures markets to trade. So it's actually quite, you know, it's evolved, but it's still sort of the same
ecosystem. And I think, correct me if I'm wrong, but it seems like the market's evolved because the strategy used to be very, very volatile, right? And now you're in a different place, right? So talk to us about how you engineer, risk-adjusted performance. How do you keep vol low? How do you dial down volatility when you're practicing such a volatile strategy inherently?
So in our world, what I think is really cool about futures is we think about the world as allocating risk instead of dollars. And so the way that we think about managing risk is really about measuring the strength of sort of each of the markets we trade and adjusting that for the size of the volatility of that particular market. So in some sense, it's sort of like a long-short risk parity strategy where you're managing how much exposure you have to different assets. So for example, cocoa is very volatile, but short-term debt is actually not that volatile. So when you combine these things together, you need to measure sort of the relative strength of them and then also adjust for the sizing that makes all of those positions better behaved.
Nicely said. Just jump in here, Damian. You're all fired up here.
Well, we're in a very different environment also in that rates are high, right, Tom? So the embedded leverage within futures and forwards, it just changed.
No, come on, the free lunch of the last 6 years is gone.
So how does that impact the strategy, Katie? How do you look at the inherent leverage, the funding embedded within your strategies?
Well, this is a great question because most people don't understand that futures markets have implicit leverage instead of explicit leverage. And what do I mean by that? Is that when you use futures, you implicitly get leverage in those commodities or those futures on equity indices without having to borrow cash. It's implicit in the futures contract, which means that 80 to 90% of your capital is actually in collateral that earns cash yield. So we basically have a carry that we didn't have in a low interest rate environment. And that sort of means that you can be more effective with your collateral.
Katy Kaminski with us, AlphaSimplex, an extended conversation this morning. Ian Bremmer will be with us in the 9 o'clock hour. Just power-packed show today. Thank you for being with us on your commute across the nation on Apple CarPlay internationally. And of course, I must say on YouTube, subscribe to Bloomberg Podcast. Katie, are we competing away, diversifying away, and hedging away total return? We featured yesterday a number of non-trend, non-CTA hedge funds with single-digit returns, and you can rationalize that, except I got growth portfolios up 30% and SPX up 20%. Plus, at AlphaSimplex, how are you rationalizing single-digit hedging versus a lift in the market?
Well, I think the challenge is, and there's twofold. One is the market has been up quite a bit, so obviously directional strategies might work better. But you also have an environment where borrowing is more expensive, so sort of leveraging up relative value positions can be more challenging. And I think this is sort of the slow migration that we're seeing.
What are you seeing in the equity market? I know it's away from the heritage of CTAs and foreign exchange and commodities, but do you believe in the American bull market?
Well, what you're seeing is, especially the growth numbers and some of the fundamental data is definitely consistent with the technical views, where you see that the U.S. signals have been much stronger. And you mentioned sort of single name equities. What we've seen, a lot of single name equity strategies have worked very well in the last year or so because of the dispersion across different asset classes, or not different asset classes, but different sectors, and just this sort of big Mag 7 versus the Russell and other sort of idiosyncratic themes across equity markets. So it's been a fun place to be as a technical or systematic trader.
Katie, last question from me. Let's delve into commodities a bit, and it's a very different place now, right? I remember the good old days, right? When Cargill and Archer's Daniels and basically those big, old stodgy beasts, took them a year to turn in the sea and we could kind of pick them off. But that's not the case anymore now, is it? They're very sophisticated trading shops, right? And they are really the marginal risk takers today in commodities. Talk to us a little bit about what signaling they're giving you in this market. How are they behaving? Are they behaving rationally, or are they trying to get ahead of these tariffs?
Well, I think, if you look at how commodities have moved, commodities have been really sort of in an uptick, particularly energies more recently. My guess is that, if you believe in price discovery, these type of players are really sort of analyzing that information and bringing it into the market. So commodities, you're right, they're still complicated because one futures contract on one commodity is a different commodity than the next one. So they're more complex and they're more seasonal. But, you're right. It's been a space where people have really gotten up to par.
I mean, what's really important here is she was in Boston at Logan, and she went over the Wheatstone Bridge to Cambridge and did a double E in engineering.
MIT.
And, at MIT as well, and she's visiting lecture at Sloan. When you're talking to the animals at Sloan, Catherine Kaminski, how do you tell them to not lose money?
Ooh, don't overtrade.
Thank you. I knew, it's like a lawyer. I knew the answer before I asked the question. In this addictive financial media, Katy Kaminski, all I see is overtrading. How do you operationally say no when there's this frenzy, I got to do something? How do you pull back?
Well, this is why I've been so fascinated with systematic trading. Is the goal is you disconnect your emotional response from your actual trading decisions. And that's hard to do because in the heat of the moment, we all want to react to Tesla. We all want to react to something we read. But really that diligence of not doing that is really important.
Katy, last question. I keep saying last question, but I have so many more. I mean, talk to us really, because I'm not in the market the way you are anymore. Talk to us about the cost of trading, right? Talk to us about what, banks, I mean, I remember for years and years and years, the cost of broking, of holding custody, it was all coming down. Now it's a very different place. If I dare I say, it might be going in the other direction. Is it expensive to trade? Is that why you're not necessarily an advocate of high frequency trading? Has it gotten more expensive? Is it getting more expensive in an inflationary environment?
Well, generally, I think cost of trading has been going down. I think where the cost of trading is going up right now is with explicit leverage. So if you look at something that the biggest theme that would be a challenge, that's borrowing money is more expensive today. And that would probably be the most important cost when you're thinking about hedge funds. Because in this environment, anytime you need to lever or take two sides of a particular position, that's going to be more expensive in a world where you have much higher borrowing costs. So I think that outweighs any of the sort of themes in trading from my perspective.
We were mentioning some of the giants of CTA. I mentioned Mr. Trout of Bermuda, and John Henry, who runs a small baseball team up in Boston. And, it was back when it was, Damian, it was Spark stations. And which you're too young to remember this. It was Sun Microsystems Spark stations.
I know what you're talking
about. And fancy people from MIT, this guy Andrew Lowe and others, were like, we can do this. And all of a sudden, the Bloomberg showed up, and you could pop ADX DMI over a cup of coffee. It was unreal.
I remember those pits. I mean, Katy remembers this. I mean, if you could get a guy with a little headphone in on the pit where you're doing trading Eurodollars, trying to pin strikes on where the Fed's going to go. Oh, these are the good old days.
Yeah.
Ribor, short sterling. I mean, come on, let's go.
Katy,
one by twos, one by
the
threes.
Good old days, or is it still about legit mathematics, technical analysis, and trend base? Is it the same old, or are we just something new?
Well, I think the truth is trend still works. I mean, it works over a long horizon and people are people. And so I think the frequencies change, but we have sort of human behavior, which causes us to overreact and underreact to news and changing environments and to be terrified by change. So I think that creates natural trends in markets. So I think same. We're still the same, different technology.
Katy Kaminski, thank you so much. Greatly appreciate it. This morning, got to go to some breaking news here. But Catherine Kaminski with AlphaSimplex, brilliant. We say good morning to Global Wall Street and all the supporters of what we try to do in a more simplistic way with quantitative finance. Futures lift up 23, is now up 32. There's news out of Israel and a hugely news flow Friday. Right now, from New York, with our news from New York City, Michael Barr.
Thank you very much, Tom, Damian, John. Israeli Prime Minister Benjamin Netanyahu says a deal with Hamas to return hostages held in the Gaza Strip has been reached. Israel's high-level security cabinet approved the ceasefire and hostage prisoner exchange deal with Hamas, paving the way for a weeks-long pause to the 15 months of fighting in Gaza. The deal will now be brought to the full cabinet. The death toll has climbed to 27 as crews in Los Angeles continue to fight wildfires. The California Department of Corrections says more than 1,000 prisoners are embedded with CAL FIRE. Inmate firefighter Sal Almanza spoke to ABC.
Giving something back to the community and doing something positive while I'm doing this sentence was the most important for me. Also, having my son being able to look and see his father doing something good while he was in this situation.
At least 12,000 structures have been destroyed. President Joe Biden announced today that he was commuting the sentences of about 2,500 people convicted of nonviolent drug offenses. Finally, he's known as Mr. Baseball. MLB Hall of Famer Bob Uecker has died. The Brewers announced his death in a statement saying he had battled small cell lung cancer since early 2023. After a 6-year career in the majors, Uecker became the voice of the Brewers in 1971, becoming the iconic voice of the team.
Here comes Lorenzo Cain. He's in there. And the Brewers have beaten St. Louis. Do you believe that one?
Uecker also found success as an actor in the TV show Mr. Belvedere and in the Major League movies where he played broadcaster Harry Doyle.
Just a bit outside. He tried the corner and missed.
That is a catchphrase that will live forever. He was also a popular guest on The Old Tonight Show with Johnny Carson. Bob Uecker was 90. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Damian, John.
We were so lucky to witness what he wrought.
Yes.
I mean, to see it from this complete unknown. I mean, just complete unknown. And he built a multifaceted career on joy.
Oh, my God.
That was the number one thing.
Watching him on the Tonight Show, I rolled. I remember he was telling a story about, I couldn't play basketball. I don't know what happened. But we solved it when we pumped it up, and then we're fine.
What I would suggest to those, particularly our international audience who are trying to figure out baseball like I'm figuring out cricket, go watch the Tonight Show YouTube videos with John Carson. Just really extraordinary. But his Hall of Fame speech, he's up in Cooperstown in the Mecca, the Vatican of baseball, and everyone around him is a legitimate superstar.
Yeah.
Willie Mays was in tears.
Yeah.
Listen, Willie Mays couldn't keep it up. He was in tears listening to Uecker.
I loved him. I adored him in Mr. Belvedere. He was funny, and I mean, it was just a genuinely funny guy.
Damian,
now, look, I wasn't alive in 1965, but apparently, I mean, my father used to tell me this, and my father's a huge Brooklyn Dodgers fan. Sandy Koufax, I think that was his greatest moment in baseball, was he hit a home run off Sandy Koufax in '65, and then Sandy intentionally walked him later in the game. So, you know, I mean, that's just, I mean, he's got a storybook career.
Nicely done. He invented so much of the American fabric from, I think, 34 years with the Milwaukee Brewers. I mean,
yeah, Milwaukee born.
Well, actually, he joined it in '71. He was behind the mic since that time.
Yeah. Michael Barr, thank you so much for that. Greatly appreciate it. In Canada, we have a race. I guess it's a liftoff. Chrystia Freeland, the former finance minister, will run for office, and she'll be doing that on the Liberal side against Mark Carney.
Mark Carney.
He announced that the former governor of the Bank of England. We should point out that Mr. Carney is chair of Bloomberg's board of directors for Bloomberg Incorporated. But this is, it's a real race, Freeland Carney.
Yeah, that's right. Are we in Inc? I thought we were Bloomberg LP. I thought we were a limited partnership. But nevertheless, he's chairman of the board of directors for Bloomberg. Yeah.
There we are.
Yeah.
Futures up 37 from New York. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. This offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Stocks set to rise ahead of the long weekend. The revival of Federal Reserve policy easing bets pushing Treasury yields lower, stocks higher. The swaps markets now expect some 40 basis points worth of rate cuts from the Fed this year. Basic Resources shares leading the way in Europe. That's because Glencore and Rio Tinto held early-stage talks about combining their businesses. And the Supreme Court could rule this morning to uphold the law that would ban TikTok in the U.S. if its Chinese owner ByteDance doesn't sell it. Weight loss news. Novo Nordisk says a bigger dose of the main ingredient in Wegovy, its top-selling weight loss drug, helped patients shed more pounds in a trial than a standard dose. And then at the same time, the U.S. is going to slash the price it pays for Ozempic and Wegovy, targeted drugs for Medicare price negotiations. Dow futures up 240, S&P E-minis up 37 points, NASDAQ futures up 196. The 2-year unchanged, actually, 422. The 10 down 4 basis points, 456. Chew on this as Donald Trump promises the biggest deportations in U.S. history. Here's something to consider. U.S. farms run on an army of more than 850,000 crop workers, and almost half of whom the Department of Agriculture estimates are undocumented. So, yeah.
Something to think about.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. Yeah, that's your Bloomberg Business Flash. Damian and Tom.
John Tucker, thanks so much. Good morning out on YouTube. You know, they said to me, we're doing YouTube, and I said, what's that? And I'm learning every day. I got a whole team of people, young kids, they're all like 23, explaining to me YouTube, and one of them wants me on TikTok. Should I be on TikTok, Damian? I don't think so.
I don't think TikTok's going to be here past Saturday.
It's not going to be here. Maybe I'll do it for one day. But I love the live chat. Eamon, thank you so much. As we were talking about Bob Uecker, he mentioned one of my heroes, Kurt Gowdy of Wyoming, who was a voice of the Boston Red Sox. He knew my grandfather, and he was so kind to me a zillion years ago. He was a complete, like Bob Uecker from that time, just a complete class act. Thank you for mentioning Sandy Koufax.
Oh my God! I mean, my dad. How can I not? I mean, the Brooklyn Dodgers. I mean, that's one of the reasons my dad became a Met fan as opposed to a Yankee fan.
Sandy's still 32 years old. I mean, in our minds, he's forever.
I know.
32.
Absolute legend.
Anyways, enough there. Speaking of legends, and this is a joy, we've got him for an extended conversation this morning. Jim Caron joins us, Cross-Asset Solutions at Morgan Stanley. Jim, I thought of you, I think it was last night. They did a beautiful treatment on how the Jet Propulsion Lab at Caltech saved itself from the fire. Have you talked to anybody out there? I mean, you know, JPL's got their own fire system and all that. But it came right up to the edges of JPL.
Yeah, I was very concerned about that. I still have friends that are out there. Some of them sadly did not do as well with their homes. So we are putting together a little bit of a campaign to try to help everybody. But if anybody could figure out how to stay safe, I think it would be the Jet Propulsion Lab.
We'll see what they do. And of course, they've had a huge, huge decade in unmanned spacecraft. What they're doing with Saturn and things out farther than Pluto. Did you know Pluto? It was named after one of the Disney characters. Pluto's out there somewhere. We went by it with a spaceship. Jim Caron right now from Morgan Stanley on the mix that we're in right now. Jim Caron makes sense of the first 17 days of January. No one else can.
Well, it's a tall order. I'll try. So, look, I think one of the big changes that has gone through is that we started the year very, very sure that the Fed was going to cut at least 2 times. Within about several days, we said, well, maybe it's 0. And now we're back to they're probably going to cut, 1 to 2 times. So what's really been happening is all of the action has really been at the back end of the curve. So the curve has been steepening, meaning that the 10-year yield, the spread between the 10-year yield and the 2-year yield has been expanding. It's been widening. And I don't think this is necessarily a bad thing. And I think when we look at the markets today and we say, well, bond yields are rising, I know they've recently fallen over the past day or so, but bond yields had been rising. Is that going to break the equity markets? And I think we need to ask why yields are rising and which yields are rising. And if it's the back end, and it's because people expect there to be, better growth and higher productive growth with low inflation, and the front end rates stay relatively pegged to where the Fed funds rate's going to be, then I think that's okay. So in other words, you could get a spread between the 10-year note and the 2-year treasury to be about 50 to even 75 basis points. So if the 2-year treasury is at around 4.2, 4.25%, it's not unreasonable to think that you could have a 10-year note that's around 4.75 or even 5%. Now, fortunately today, those yields are lower, and that's a little bit more accommodative, and that's okay. But the market is building in this extra term premia because of this uncertainty about the new administration, what the announcements may be, and everything else. And the bond market has been driving the equity markets, and that's, I think, what we've been seeing.
I mean, Tom, how prescient of Morgan Stanley Investment Management to have Jim Caron, with his experience in rates, FX, emerging market fixed income, to run the ship at MSIM. Not another stock jock. So Jim, you're talking about the shape of the yield curve, not the level of interest rates. And I think that is so important. And what's the read through to the rest of the world from that? Because we are seeing term premium build back into other developed markets, other emerging markets for that matter. You are seeing curves steepen. Just what's the runway for steeper curves here, not just in the U.S., but abroad?
Yeah, so this does create a little bit of a headwind. So for example, if we look at the UK, right? So 30-year UK bond yields got to levels that we haven't seen since 1998, right? So that's not necessarily a good thing. Now, what we have to recognize is that a lot of countries outside of the US have a high level of external debt, like say the UK, which means that they rely on the US Treasury to be the price setter. The US Treasury market is the largest bond market in the world. It effectively sets the price for interest rates. And essentially, if you have long-term bonds in other countries, it's going to follow the US. So that's not necessarily a good thing. But the one thing I want to highlight, though, is that when we think about the policies that Trump is trying to put through, he's effectively saying, I want to run expansionary fiscal policy. Now, when I say that, I mean, lower taxes, deregulation, things like that. But at the same time, I also want to cut government spending, and that's what the DOGE department is all about. And if you can do that, you can have low inflation and expansionary policy. That's the trifecta. Can it be done? Is really what the question. This could be a positive.
We're going to have an extended conversation here. We're going to go to break and come back, but let me get this in, Jim Caron. I think it's too important. This weekend, you're going to be sitting with somebody who's up to their eyeballs in cash. They're scared stiff. For whatever reason. If I look at Red Sox middle relief, I'm scared stiff. Jim Caron, what do you say to people afraid to participate in the markets?
So right now, I still think that we are in the midst of a longer-term protracted bull market in equities. So I would say that the equity markets, particularly the broader sectors, the mid-cap sectors, more of a broadening out, not just the Mag 7, although I still like the Mag 7, but I think the broader sectors of the equity markets still have more earnings room to run higher and effectively have higher quality growth and increases in prices and valuations in that space. So I would say, look, a well-diversified portfolio in the equity market, not just the index, because the index is going to be highly skewed to those large cap tech stocks, but something that's very, very broadly based in the mid cap sector. I think if you're a long-term investor, large cap value, for example, could be an area that you want to start to think about and look at into the future. So I'm not afraid of the second market. I'm saying start to invest. Let's go. I mean, get going. And bond yields are higher, by the way, so they also offer better return too.
We're going to bring Jim Caron back to look at the cross-asset nature. Damian's chomping at the bit. We're going to go fancy Damian Sassower with the physicist Jim Caron here in a moment. He is with Morgan Stanley. Damian, Drew Mattis just publishing over at MetLife. I love how he puts this. I mean, Mattis is always so direct about it. From placid to volatile. Does volatility benefit our listeners and viewers?
It depends. It depends on who you're talking about, right? I mean, there's plenty of our listeners who are benefiting from volatility. It's those who are long straddles. But what I have to give when we get Jim back on here, what I really got to ask him is, we have BOJ coming next week. We have Friday, and we saw what happened with the yen carry unwind earlier last year. I mean, for me, I look at that and I say, wow, how are investors positioning? You know, is it euro yen? Is it dollar yen? You know, what do you?
They're betting strong yen. I mean,
carry.
That's
it's the broader reach for carry. The appetite for incremental yield. Does that exist? Does that sustain itself in 2025?
Yeah. We got a political nature as well. Again, Joe Matthew and Katie Lyons, their leadership on balance of power, with special coverage coming to you Monday on the inauguration. Right now, a headline out, this from Xinhua, Xi and Trump hold phone call. Mr. Xi will not attend the inauguration, but is sending a senior official I don't have in front of me, but very important news. Thank you, Sai, for that headline coming across the Bloomberg, that according to Xinhua. Right now, futures up 23, they lift further, up 45. The VIX now nicely under 16, 15.80. Damian Sassower, Tom Keene, Jim Caron to continue Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News with this Bloomberg Business Flash. He mentioned Intel, Tom, up 5% pre-market. We are data dependent. Housing starts beating estimates. Much higher than the previous reading, beating all estimates, coming in just under 1.5 million starts. This is on an annualized basis for the month of December. Buzz at Bumble. Bumble says its founder and executive chair Whitney Wolfe Herd returning, become CEO effective mid-March. The U.S. auto safety regulators probing General Motors over concerns that more than 870,000 of its full-size pickup trucks and SUVs face the risk of engine fire. TD moving up. This is Toronto Dominion Bank moving up the start date for its new CEO, Raymond Chun, by 2 months, slashing executives' pay. This all comes in the wake of its historic and costly money laundering scandal. Dow futures up 241. S&P E-mini futures up 40. The NASDAQ futures 238 points higher. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Damian and Tom.
John Tucker, thanks so much. Monday, snow in Brunswick, Maine. The low will be 0. Good morning. Those of you in centigrade, I don't know what that is. 0's cold. That's all you got to know in Fahrenheit. And I would suggest if you're at Bowdoin, and you're a physics student, which means no one will speak to you because they're just terrified of you. If you're in Brunswick, it's a certain cold in Brunswick. Yeah. The wind comes off the ocean there. It's a different cold at Bowdoin.
It is. No, I mean, but it's no less cold on West 8th Street, NYU. We're talking to an NYU MBA also, so you can harp on Bowdoin, but I'm an NYU Stern alum myself. So, if we're talking about Jim Caron here, we have to be talking about NYU as well. No?
Okay.
Jim, this is my question for you, and it's really interesting. When you look at your phone, you're on your way into Morgan Stanley in the morning on your morning commute, and you see an email from Lauren Reeder, the incomparable Lauren Reeder, Chief Risk Officer of MSIM. Where are the tail risks in this market? Where do the black swans swim in this market, Jim?
Yeah, so it's a good point. It's been so cold; it's been hard for me to think straight. But let me just say that I'd say that the big risks are it's really about inflation, because if we start to see that inflation becomes unanchored, and if Fed policy and other central bank policy shifts from cutting rates to actually hiking rates, that is really not what's anticipated, and that could unravel a lot of things, and it could end pretty badly. So there's nothing that I can see other than something like that, because look, the economic data has been relatively strong, the jobs data has been relatively strong, the company level data has been relatively strong, earnings are good, so everything, there's nothing obvious that's out there. Clearly, there's always geopolitical risks and things like that. But I think the risk that we have is that if we get something more like an inflation shock, so let's say if we go through the first 100 days of the Trump administration and the markets interpret things very, very differently than what's intended, you could start to see a lot of volatility come into the markets. And this is stuff that's hard to hedge, right? Because you just can't really anticipate it very, very well. But that's what I'm focused on.
Sorry about that blue button. Jim, you're the CIO
of Detroit
of
Lions blue. Do you see that? It's not. This is Barr. I tried to get Buffalo Bills blue on the button, and I got vetoed.
Jim, my apologies. You're the Chief Investment Officer of Cross Asset Solutions at Morgan Stanley Investment Management, but you previously held a lot of different roles. You were head of macro, you were head of rates, FX. You were head of emerging market strategy. Talk to me about the bullish narrative for emerging markets in this market. I'm struggling with it, Jim.
Yeah, so I think a lot of things are going to start to get realigned from a trade perspective. And a lot of this has to do with some of the tensions between the U.S. and China. So effectively, when we think of the global markets, right, when we think of the S&P 500, what we have to recognize is that 41% of the earnings from the S&P 500 come from outside of the U.S., and that also includes emerging markets too. So, when we think about policies in the U.S. where we say America first, for example, that, Trump, would normally say, it doesn't mean America alone. So one of the aspects of how we think about the markets going forward is that, yes, the dollar has been strengthening. I think that the dollar strengthening has gotten to where it needs to be at this point. I don't think it really needs to get a whole lot stronger. I don't think that it necessarily will. I don't think it's going to get a lot weaker either. I think this is going to be the range that we're in. But effectively, from an emerging markets perspective, if we start to see a rise in the CapEx cycle, which we're seeing global PMIs are already starting to pick up. Yeah. The PMI sector for manufacturing has been in a recession for all intents and purposes for the past 3 years. It's been sitting below 50. Now it's starting to move towards 50 and start to rise above. That is a positive globally for manufacturing, especially for emerging markets who supply a lot of the raw materials.
Jim Caron, one final question. Fold in the work of Seth Carpenter, Ellen Zentner, and others within economics at Morgan Stanley. The great missed call of the last 2 years has been better economic growth, maybe some form of sticky inflation, and it sums out to a resilient nominal GDP. What does a resilient nominal GDP mean for our listeners and viewers deep into 2025?
So what it means is that you can still have earnings growth rates in double digits for equities. So you could have 10, 11, even 12% earnings growth rate. Now, what it also means is that this could be more broadly based. So when we think about, let's take a look at two indices. Let's look at the S&P 500, which is what everybody looks at, and then let's look at the S&P 400, which is more of a mid-cap index, more of a heavily mid-cap weighted index. The earnings growth rate of the S&P 500 was primarily led by those magnificent 7 stocks. If you look at the S&P 400, the earnings over the past few years has been pretty much flatlined and pretty steady. So there's a big divergence in what's been happening with the large cap growth in tech companies versus the mid cap and even large cap value companies where their earnings have been relatively flat and steady. So if you have a higher nominal GDP and we have a broadening of the market, the majority of the market has to catch up. So therefore, there's a great opportunity, I think, going forward. So that's what it means to listeners, is if you get higher nominal GDP that's sustainable.
Jim Caron, thanks to the clinic. Greatly appreciate it. Mr. Caron, always with Morgan Stanley and NYU Stern. Stern, I looked at the math once, so Damian. It's Stern. It was really rigorous.
Oh, absolutely.
It's like quant, and all that.
Unless you knew somebody like Jim and I did and you could cheat off their notes. No, I'm just kidding. But I tell you, Stern was just an awesome experience. Yeah. I mean, I learned more there than pretty much anywhere. So, yeah, I mean, and Jim is as good as it gets. 3 decades in this business.
They were one of my original supporters.
Legend.
I mean, NYU Stern.
Oh, really?
I'd love for him to come back.
Oh.
It's great. They really got
Aswath the Motorin, if you're listening.
concept,
Shout out to Aswath the Motorin.
Yeah, exactly. Got behind the whole concept, to say the least. Quickly now, with our news in New York City, Michael Barr.
Thank you very much, Tom, Damian, John. Israel's high-level security cabinet approved a ceasefire and hostage prisoner exchange deal with Hamas, paving the way for a weeks-long pause to the 15 months of fighting in Gaza. The deal will now be brought to the full cabinet, where it is expected to be signed off, despite opposition by some far-right members of Prime Minister Benjamin Netanyahu's government. Bloomberg's Ethan Bronner has more.
The far right is very upset that the government has, from their perspective, given up on goals that they had said were not to be compromised. That is to destroy Hamas totally and not to let those who are in Israeli prisons, Hamas members who have killed Israelis, out back into circulation. There are hundreds of them will go out, and they will, the right says, and that's not a crazy thought, go back into action and try again to carry out violent acts against Israelis.
Bloomberg's Ethan Bronner. There's possible hope for U.S. TikTok users, as the Chinese-owned app is scheduled to be banned in the U.S. on Sunday over national security concerns. The Supreme Court says a new court ruling will be announced today, fueling speculation it could be related to TikTok's future. We lost Mr. Baseball. Bob Uecker, the voice of his hometown Milwaukee Brewers, has died at age 90. And we've also lost the filmmaker who gave us the TV series Twin Peaks. David Lynch also gave us such movies as Blue Velvet and Mulholland Drive. The cause of death was not immediately available, but Lynch had been public about his emphysema. David Lynch was 78. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Damian, John.
To those younger, go see a younger Lynch, The Elephant Man. Was
yes.
Absolutely extraordinary.
John Hurt, you won't even recognize him.
You will not recognize anyone in the movie, but it is a jewel, and the black and white, the grain of it was just extraordinary.
Oh, that was a powerful movie.
As well. David Lynch, just truly iconic. Damian Sassower with us here. And just quickly, Damian, yes. The focus on China. This is the first missed call of the year. 5% growth. Who expected that?
I think everyone did. If President Xi said he was looking for 5% growth, I don't want to be the one to disappoint him. But no, I think you're right. A lot of the big shops were looking for sub 5% growth, and they can get it.
Futures up 40 now. Futures up 243. The VIX 15.90. It's Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Paul Sweeney, out. We expect him in from some lofty island somewhere. It's been good. Damian Sassower with us this morning. I'm going to get right to it. This is an important conversation. When you grew up in Western New York, the Harvard of journalism was Syracuse.
Right.
People don't know this. No. But somebody would go, I go to Syracuse. And if they said they took electrical engineering, you're like, yeah, whatever.
Newhouse.
If you go to Newhouse, you were a god. Joining us now, the gentleman from Newhouse, John Stashower, joins us, of course, always with Bloomberg Sports. John, what was it like in the Jim Boeheim days up at Syracuse in basketball? I mean, it was glorious, wasn't it? I don't know. I lost John Stashower. I thought I had him here. We're trying to wire him in our control rooms. John, are you there?
I am, Tom, but I'm in a car. I'm driving through New England. So
Okay.
It's on 87. No, it's fine.
Okay, well, John, let's get right to it then on this weekend's football game. To me, is a huge amount of excitement. Which of the 4 games are you most focused on?
Well, the best one, certainly on paper, is the last one. It's Sunday night, and that's Baltimore and Buffalo, and it's basically a pick 'em. I think the Ravens are like a 1-point favorite. You got the 2 quarterbacks are going to be 1, 2, and one order or the other for the MVP. Lamar Jackson, Josh Allen, they were the same draft. I mean, it's going to be a great game to watch from home because it's going to be, below 0 temperatures, and I think there's a 40% chance for snow. So that's definitely the game of the weekend.
Yeah.
John, you gotta help me out here. I mean, I know the NFL is and everyone's is front and center for everyone, but let's talk about the college football playoffs. Let's talk about the championship game. Let's talk about Ohio State University, Notre Dame. What are your thoughts on Monday?
Yeah, it's going to be interesting. I mean, it really makes for quite a football weekend because we always have the NFL this weekend, but now on the Monday night of the holiday, you get the national championship game. And Ohio State is like an almost 10-point favorite, which I think is a little surprising. Notre Dame's won 13 games in a row. But Ohio State's been really impressive in this playoff. 3 wins by double digits. Although Texas, remember, they were down by 7. They were the one for a game. So I give Notre Dame a chance, but I certainly now guys are the favorite.
John, we're going to let you go here. We got some car antenna problems, but we greatly appreciate John Stashower nailing the sports report for Bloomberg Surveillance each and every
Syracuse
morning.
University. Corey Sassower went to Syracuse University.
It's going to be a little busy Monday morning. We're going to have an extended John Stashower for you Monday morning on Bloomberg Radio. I look at this and I got a huge response yesterday to Michael Nathanson on betting.
Yes.
Huge.
No, that was really
response.
great. Flutter, FanDuel, drafting.
And just like this weekend, how much is going to be bet through Monday in Notre Dame, Ohio?
You're missing one of the big events this weekend. One sport that people overlook that gets a lot of betting dollars is tennis. And this weekend's the Australian Open. Yeah, exactly. So, I mean, you've got football, you've got basketball, you've got hockey, and you've got the Australian Open.
Yeah, but I'm a lot because I always bet for Emma Raducanu. I mean, I've got to. I got to.
What's a prop bet for tennis?
How many double fault? I have no idea. I mean, how many deuces are there in a? I don't whatever. But I'm not a gambler. I'm a lover, not a fighter, John. You know this.
Okay.
I don't believe a word of that.
Very good. So what we got to do is we got to get ready for the weekend, and there's only one way to get ready for it. If you're a Buffalo Bills fan, and it's they have their songs. We are family, and there's like different songs. The Bills have one of the greatest songs from the gentleman from Las Vegas. And it's like, you got to go. You got to go there. Right now, let me do a data check before we go to the Bills here. It's a lift to the market. Mm-hmm. Futures up 23 has become futures up 42. And the VIX, you may see some more here, 15.86 on the VIX right now. On oil, I got $81 Brent crude. I think that's a backstory, as Damian was talking about.
Oh, here we go.
Earlier. All I could say, come on.
Did you see the Bills on the sideline singing the song?
Yeah.
That was beautiful.
Home sideline, snow, cold, Bills, good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Lisa Mateo on deep assignment today. Sweeney on a Gulf Stream somewhere trying to get back to New York. Damian Sassower, the short straw, 2 days in a row. It's too much, Damian. What has the Indonesian currency done in the last 48 hours?
We're back up through 16,000, Tom. It's not pretty. 16,000. That's that a real number? Yeah, no, it is really.
When did you let Mrs. Sassower know this was your life, looking at Indonesian currencies 24/7?
I don't know. I had her fooled early on.
You had her fooled early on.
I mean, look, I was captain of the debate team. I was president of student council. I was
You were
I had it
captain
together.
of the date team in Vanderbilt?
Debate, not
I thought you
date.
said date team.
Him?
I was a very good debater when I was.
We say good morning on a Friday. Ian Bremmer will finish strong here in the next half hour. We're going to start strong in moments with Margaret Brennan on an historic set of 3 and 4 days. Whatever your politics now, we're going to cover it here. On Monday, Joe Matthew, Kaylee Lines, Tyler Kendall, and Anne-Marie Horton at the White House, and then on the parade route as well. And then picking it up, Bloomberg Business Week, Carol Massar, Tom Stenavec, and David Gura will be in the afternoon there of this historic Monday events. And, of course, it'll be the ceremony, the Vice President, J.D. Vance, and then, of course, the nation listening carefully to the speech of the next president, Donald Trump, as well. Let me get to the Bloomberg Business Flash from the Interactive Broker Studios. John Tucker.
All right, guys, let's start with the most active pre-market shares of Intel. 8% higher right now. We had this report from the website Semi-Accurate saying the company may be an acquisition target. Equity futures extending their gains. We did hit session highs after the state-run Xinhua news agency reported that Chinese President Xi Jinping held a telephone conversation with the President-elect Donald Trump. The U.S. planning to slash the price it pays for the Novo Nordisk blockbusters, Ozempic and Wegovy. These are the latest drugs to be targeted for Medicare price cuts. Novo shares, they fell about 4%. As a result, LVMH regained its spot as Europe's biggest stock. The KBW Bank Index set for the best week since the one covering the November election. Easing inflation, the driver there. Robust earnings from the likes of Citigroup and Morgan Stanley also helping out there. I'll do European stock action as well. The DAX at a record, FTSE 100 at a record. Dow futures head of the cash open on Wall Street up 258 points. The S&P E-mini futures up 45. The NASDAQ futures 297 points higher. 2-year 423 unchanged. The 10-year 3 basis points lower. 458. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Damian and Tom.
John Tucker, thanks so much. So much to happen here to get through Monday and into a new Trump administration. She has provided leadership at CBS in driving forward conversation. Margaret Brennan joins us now, of course, with Face the Nation. See it on the CBS television network Sunday morning, and of course on Bloomberg Radio Sunday afternoon. Margaret, I'm going to cut to the chase. Republicans and Democrats thunderstruck by the caliber of the talent. And then, with Secretary of Treasury, I guess, doing a good job yesterday. Enter, stage right, Michael Waltz of the Virginia Military Institute. Who is Michael Waltz, and why are you going to speak to him Sunday?
The Republican congressman from Florida, former Green Beret, is the incoming national security advisor to Donald Trump. We want to talk to him about the job he is about to take on because he will be the man in the Oval Office providing that advice and really, in many ways, curating what gets to his desk from the cabinet officials. We want to talk to Waltz about this really complex environment. Most immediately, you have the question of who's going to implement and oversee this incredibly complex ceasefire and hostage deal that could see some hostages coming out as soon as Sunday into Monday. Which official diplomats with deep regional knowledge will take over from Bremmer, Girk, and the CIA director? We want to talk to him about China. Why did President Trump invite Xi Jinping, who just is now sending his vice president to the inauguration, an inauguration at which the CEO of TikTok will be an honored guest? at the same time that TikTok is deemed a national security threat. And the Supreme Court's trying to decide whether or not it goes dark immediately. I mean, there's just such a list of things. It is such an important moment.
Margaret, within the CBS reporting, how will the first weeks, forget about the 100-day shtick, how will the first 4 weeks of Trump 2 differ from Mattis, Kelly, McMaster, and others in the first term? To me, there's a radical set of different people, with Mike Waltz being one of the few common features of what we saw 8 years ago.
It will be different, and we are already getting a sense of that, in part because we don't have people who are completely without clue as to how government works, right? Donald Trump is bringing with him staff
Wait, Margaret, stop. Damian, do you see how diplomatic Ms. Brennan is?
It was lovely.
Compared to me.
That's a
Margaret, please continue.
No, but so that's where the sort of learning the process, some of his advisors who don't require Senate confirmation may be able to offset some of those who do. We know Mattis had such experience both on the battlefield in terms of dust on his boots. Pete Hegseth, I think, tried to get people to forget that Mattis was actually a general and the first Secretary of Defense in the Trump administration when he claimed he'd be a new set of blood with a completely different perspective. We will see a bunch of cabinet officials who might not have ever been up for a job like this had Donald Trump not be president of the United States.
Damian, jump in here and save Margaret Brennan.
Margaret, you mentioned Mike Waltz, and I remember Mike Waltz because he boycotted the 22 Beijing Olympics, the Winter Olympics, right? So another notorious China hawk, and there's so many of them in this administration. And, now we're hearing all this news about Tencent's been added to the list of China military firms, export controls on rare earths. China's preventing Apple and BYD from shifting production across Asia this morning. So talk to us about this Cold War that's sort of lingering in the background here in the minds of America and China. I mean, how do we get through this? What comes next?
It's the big question. I mean, you have Marco Rubio, who could be the next Secretary of State, who's actually sanctioned in China. Does that mean he could ever travel there? You have, yes, China hawks, but this is not a very hawkish first approach on day one to be asking Xi Jinping to send his best representative to Washington and to be embracing TikTok the way Donald Trump now is and reversing his past position. Perhaps that has to do with the 170 million users who want to stream the Trump inauguration on social media. But we will see how this actually translates into policy. Is this a charm offensive by Beijing to try to convince Trump not to go ahead with the tariffs that he promised on the campaign trail? What does this actually mean? That's one of the things we want to ask Mike Waltz is make sense of all these discordant things for us. What's the strategy? What's the approach?
It's going to be fascinating. In your lineup here, you've got somebody stuck in the middle, which is a senator from the Carolinas. Lindsey Graham, I'm fascinated, Margaret, how you initiate a conversation with a gentleman torn between a Trump GOP and a mainstream GOP. How are you going to do that?
And Lindsey Graham has gone between them time and time again. I don't know, at this moment in time where he is in relation to the Trump orbit. We'll ask him that. We'll talk to him because he is, for example, a staunch supporter of Ukraine, something that Donald Trump is not. And we want to talk to him about, okay, by the way, what did we actually learn from that hearing with Pete Hegseth? We didn't actually get a lot on policy or vision for the Pentagon or innovation or changes. There was more about who he is as a person.
Yeah.
And character is important, no doubt. Tim Kaine, one of my other guests, will be on with us, and he was the Democrat with some of the sharpest questioning on that front of, why would an oath to the Constitution be different than breaking an oath to your first and second wives? That was pretty sharp. We'll talk to him about that.
Extraordinary. An amazing 4 or 5 days for Face the Nation. Of course, Margaret Brennan, host of CBS Face the Nation. Hear it on the CBS television network Sunday morning, and you can hear it again. Bloomberg Radio on Face the Nation Sunday, 2 p.m. in New York, Washington, D.C., and Bloomberg 92.9 FM across all of New England and Boston. We thank Margaret Brennan for that time here on a Friday morning. Futures advanced fractionally from a 42 level up to 49. This is a great joy. When Damian Sassower shows up, we really do an EM and a more Pacific Rim skew. And we can do this with a guy who learned at the feet of Alan Meltzer. If you go to Carnegie Mellon, and you got the robot factory down the cliff, and you got the theater guys over there. You go over to Tepper and economics, and there's a certain flavor to it. What was it like at Carnegie Mellon with Alan Meltzer, Marvin Goodfriend, and the other giants of conservative economics?
Incredible. I hope I learned everything I possibly could.
I was in the lunchroom with Alan once, and he threw a roll at me. He was so angry because we were arguing about aggregation of economic data versus John Edwards' polarity of a barbell America.
I can hear Alan rolling his eyes right now.
They have nuts. And I mean, it was an amazing place. How did you get from there to EM? Carnegie Mellon is Pittsburgh.
Absolutely.
How'd you get to EM?
I'm a kid from Moscow, so and they speak some Spanish. So they said, hey, why don't you go look at all these interesting countries? That's a path.
I have to jump in here, Tom. I mean, you're killing me here. I mean, this is Jaakov Arnopoulos. This is he's head of Sovereign EM for PIMCO, for Pete's sake. I mean, and when we think of Sovereign EM today, I mean, Jaakov, you know what we think about? We think about Lebanon, Venezuela, Argentina, Sri Lanka. These are the best performers.
Spicy.
I mean, how do you sleep at night recommending Lebanon to your creditors, to your investors?
I got to say, it's we steered clear for so many years, and now it's doubled in value.
In 3 months,
yeah. 3 months. I mean, granted, 8 cents to 16 cents, but that's a pretty interesting return. And all of that thanks to fascinating geopolitical wins that we're seeing.
I mean, the spread compression we've seen in high yield EM is second to none. And so I guess my question is, how much more juice is there left in the asset class here? I mean, are we going to be able to carry along here at 6-7% total returns?
Probably more, potentially more. And I think a lot of it comes down to when we think about emerging markets, past couple of years, 22, 23, rough years because of Fed hikes, ECB hikes, geopolitics, the conflict, outflows, defaults. And now we can flip all of that. I'd say all the kind of tailwinds. So the headwinds are really becoming tailwinds for emerging markets come 2025 now.
For Global Wall Street, I want Damian to drive this, but I want to ask an obvious question. If a bond is from 0 to 100, and you're buying Beirut at 8, and you've done a double to 16, does PIMCO assume that's hedged somehow? Or do you just say we can't hedge it, we got to buy it naked?
Those are dollar bonds.
And hedge it within diversification.
It's it comes down to idiosyncratic risk. Something like Lebanon, obviously, it's a peculiar story. Venezuela, you can't hedge.
Thank you.
You can't hedge. But to the extent we're actively also managing duration for buying an IG bond. There are the Chiles of the world. There are many perfectly safe places.
Yeah, but there's been this delusion for 40 years that you can hedge away idiosyncratic risk. That's not in my textbook.
Using default swaps or something of that order, of course. And you're right. From that perspective, a lot of those frontier markets do have CDS, but it's not the cheapest proposition in the world. I guess my question now is this: EM dollar bonds as an asset class. We've had 2 good years. We're up 2 years in a row. I mean, Jaakov, you know how that is. And what's supposed to happen when you perform well is the flows are supposed to follow. We just haven't seen that. I mean, what is it going to take to get investors up off their humps, to reach into their pockets, to take their hard-earned dollars and to invest in emerging market fixed income? I mean, what are your thoughts, Jaakov? What are you saying to investors?
I think some of that is happening and going to happen, but that may come out of EM equities. People are waking up to the fact that the EM equity is very concentrated in China.
Yep.
We remain quite cautious there. We've been kind of avoiding Chinese exposure for quite some time and remain quite cautious. No transparency, slowing down the economy. So my sense is, as people look at their portfolio and say, well, we have this EM exposure, some is bonds, fixed income, some is equities, and they say equities so concentrated around China, Taiwan, Asia, and with a Trump factor, they may pivot into fixed income credit, far more diversified, far safer.
Jaakov Arnopoulos with us here with PIMCO, which barely describes his expertise in emerging factor. And this is a treat, folks. This is what Global Wall Street is about. A conversation of Damian Sassower with Mr. Arnopoulos. Damian?
Well, let's shift gears a little bit. It's not just about China. It's about, Vietnam. It's about, Malaysia. It's about Mexico, right? I mean, talk to us a little bit. If these tariffs do come through, I think JP Morgan's base case is something like a 60% tariff on China just to start, right? Just to start. Forget about everything else, and these other players, these other quote unquote dumping grounds. What does that mean for emerging markets? That can't possibly be a good thing for growth and inflation.
Yeah, I think that realistically, the impact is going to be in the headlines, not in the actual economies. And even there, we have something like 100 countries we invest in. And there we pick winners and losers. So let's just focus on who's going to be in the crosshairs. Mexico, obviously, we recognize that. But we're already seeing a very constructive stance from the Sheinbaum administration, right? I think they can deftly handle the situation. They've dealt with Trump during the first Trump White House, renegotiating what used to be called NAFTA, then became USMCA. So I think they're already making moves. They're trying to figure out how they can shake hands and make a deal with Trump, already announcing, saying they were going to curb and curtail Chinese imports. So I think there's an attempt, genuine attempt, to figure out how to deal with White House.
Well, I mean, Yaakov, underneath the hood last year, we saw a lot of different things. We saw high yield outperform IG. We saw corporates outperform SOVs to some extent. What are your thoughts about positioning within the EM dollar bond asset class? I mean, are you a believer that you move down in quality, you try to take a little in search of incremental yield, or is it a more defensive approach this year? Are you going to kind of hide out in IG, hide out in some of these Middle Eastern names? I mean, what are your thoughts here?
I think there's a great mix and offer. On the one hand, there are plenty of high yield stories, quite interesting. Ecuador will remain very constructive. Elections come in a couple of weeks' time. To the extent Noboa, the incumbent, wins, you're getting right now 18% yields. They can rally materially. Turkey would continue to like on the FX side.
Yep.
And yet we can balance that with plenty of interesting IG risk coming at 6.5%, 7%. Kind of like lending to countries that don't need the money, and I'm perfectly happy with that.
My radar's up. I mentioned Stan Fisher's iconic book after his term at the IMF in the 1998 period, the Red Book, which was read cover to cover. The bottom line is our listeners, more conservative, they're really not buying Ecuador, they're not buying Peru. The more conservative listeners and viewers that we have go, what about the blow-ups that we remember years and decades ago? And the hubris I hear is, oh no, that's all behind us. It's never going to happen again. All my radar, Yaakov, is up on that.
No, I think you're exactly right. Emerging markets are still volatile. We recognize that. That's why our approach is very much to
Is currency the litmus paper to measure that volatility?
Correct. So currency tends to be the shock absorber. And our approach is really to be a safe pair of hands in a volatile asset class. So for us, it's a very diversified portfolio. And also in EM, look, the blowups were there, but they happened 2 or 3 years ago. And I think on the back of that, you're going to have a lot of clear sailing for the next couple of years within EM.
Is the crutch here, Damian, that we've got dollar bonds?
Well,
that we don't have to worry about Ecuador bonds anymore?
I mean, you are teeing it up like a softball for me, Tom. I swear to God, seasonally speaking, Yaakov and I will tell you, January is typically the biggest month of the year when it comes to EM sovereign dollar bond issuance. We are having another record January. It's like every year we're talking about another record January. What is it? Poland, Indonesia, Mexico, they're all issuing bonds. The market is swallowing them up. Is this game just about kicking the can down the road? So long as these issuers can still tap the U.S. dollar bond market, investors are still going to bid them?
No, I think that's the case. And many of them are IG names, quite safe, relatively contained deficits. Again, plenty to pick from. But also when we look around the world and we look at, let's say, U.S. corporate spreads, they're basically at all-time tights.
Yep.
So then we look at EM, IG, investment grade bonds, very safe, no default risk, and you're getting material premium. Yep. And even a greater disparity, greater pickup in emerging markets high yield versus U.S. and European high yield. So there as well, the opportunity, there's really a lot to gain from having some diversification.
I got 30 seconds. Where's the big figure recovery for the next 18 months? Is it China recover, Brazil recover? Where's a place where mere mortals can play?
Look, China recovery, I wouldn't be betting on. I would be betting on places, a select kind of picked basket of emerging market names, whether that's Turkey, there's a little bit of Nigeria.
I'm going to get you in trouble. Russia post-Putin?
I think the world is at least at the very least looking forward to the new administration putting a line under the Russia-Ukraine conflict.
We'll leave it
certainly
there.
hoping for that.
Yaakov, thank you so much. Generous of you to be here. Don't be a stranger. Yaakov Van Appelen with PIMCO. They say he's a portfolio manager. Can Jerome Schneider give him They need to give him a bigger title.
They got to give him a bigger bonus.
Jerome Schneider has a big title, and his idea of duration is 3 weeks.
I'm going to give Lupin a call.
I mean, right? Am I right? Do you
are.
ever talk to Jerome Schneider?
All the time.
What do you learn from Jerome Schneider? I got 10 seconds.
I learned how to look. There's plenty of cash in our portfolios. We always find amazing short-term opportunities thanks to Jerome and his team.
He told me once how to cook a turkey for Thanksgiving. That's how valuable Jerome Schneider is. Yakov, thank you so much. Don't be a stranger. Again, Damian, that was outstanding.
I mean, we're talking, and these are legends in the business you brought on. I mean, shout out to our team
What's
back
the
there,
yield in
Ari,
Lebanon?
Eric, Rich. You guys got a great lineup today. I mean, you knocking it out the park.
What's the yield in Lebanon?
It's got to be it's got to be double digits, I would still think, but it's coming so much. You know, let me run that for you right here. I mean,
Run that for us on the break.
10%, maybe
Damian
more.
Sassower is going to go to the Bloomberg Professional Service and figure out the Beirut Electric Company yield. We'll see on that. We advance. Yakov pushing the market higher. Futures up 40. Now futures up 52. NASDAQ up 1.8%. From New York City, stay with us, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by IBKR. Will U.S. oil production exceed 13.61 million barrels per day for November 2024? Well, you can trade your prediction at Interactive Brokers. Buy yes if you agree, no if you don't. Correct answers earn $1. Go to ibkr.com/forecast. Looks like rate policy outlook in the driver's seat for risk assets. The revival of the Federal Reserve policy eating bets pushing Treasury yields lower. This week's surprisingly cooler inflation report, the strong quarterly results from some of the bigger banks, and the ceasefire deal in the Middle East helping sentiment bounce back. Most active in the pre-market shares of Intel. They are up right now 7.4%. After the website Semi-Accurate said the company may be an acquisition target. And then Schlumberger, SLB, the world's largest oil services provider, also gaining on plans to return at least $4 billion this year to its shareholders. By the way, if history is any indication, it shows that the average 3-month performance of the S&P 500 going into the presidential inauguration is just about 1%, compared to a 3.7% rise on the way out. This is according to the people over at Jefferies. Right now, the Dow futures up 276. Ahead of the cash open, S&P E-minis up 49 points. The NASDAQ futures up 360. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Damian and Tom.
John Tucker, thanks so much. Ian Bremmer to be with us here in a number of minutes. And right now we are thrilled to talk about global Wall Street, about asset management, the driving force for Franklin Templeton. Their Chief Investment Officer, Edward Perks, joins us. Ed Perks, when you were at Yale studying economics a million years ago, I can't imagine you ever thought of the titanic shifts in what consumers are choosing to do each and every day with their money. What's the Franklin Templeton strategy for not so much this year, but the next 36 months to gather assets? How do you do that in this madness that we're in now? Because, you're not doing Bitcoin, right?
We are not. No, Franklin Income Strategies, that's for sure. But no, we do have digital assets. It's a big part of the firm's overall strategy.
What's your strategy the next 3 years here to retain and gather assets?
I really think it's about diversification, and I think that's been a big part of the firm's strategy. And if you think about the different SIMs, we call them, specialized investment management groups, we really can cover, not just a lot of the world, but all the different asset classes that we think can play a meaningful role in people's portfolios.
Ed, let's talk about the Franklin Income Fund. Let's talk about fixed income sector rotation, right? I mean, when I think of that, I think, why not just buy some prefs, some munis, some high yield, and call it a day? But no, you like agency MBS. Talk to us about which strategies within the fixed income asset class stand out to you here. Yeah, well, that's an area that stands out to us mostly on a relative basis within the fixed income sectors, and it's also relative to a year ago it didn't stand out to us. Right. IG spreads, high yield spreads were a lot wider then, and we really felt attracted more to those areas. But you look at how much spreads have tightened. We're maybe not at historical lows, but we're certainly in the ballpark. Right. And that's where when you look about current par coupons in the agency mortgage market, we're pushing up near 6%, and that's something that the spreads haven't compressed the way they have in the corporate market. So are you part of that narrative, that bid for complexity? If you're looking at MBS, and further to that, I mean, look, what about CMBS? What about commercial real estate in this environment? It's been on its rump for a while here, but it had a great year last year. Can we see more of that? Yeah, I do. I think over the next couple of years, but especially in fixed income, that'll be a theme for us. I mean, I think it's continued diversification and looking at sectors where you can still find value, and I think you just hit on several right there.
Value growth, what's the proxy for that at Franklin Templeton? I know you're going to tell me we're doing both value and both growth, but does that Perks have a bet, a lean? Yeah, I think quality dividend stocks is something that jumps out to us. I mean, if we look at the trailing kind of 2 years returns, you really have to think about it as an 18-month period and a 6-month period, because the second half of 24, there was a lot more parity across the markets. Right. We think valuations are not stretched at all in that dividend quality part of the market. Some people want to call that value, and at times those lines blur, but I think that's an area of the market that's certainly been overlooked. We're going to get the markets open here. We're going to do this in a moment. Just quickly here, do you know who's going to buy Intel? Do you got any knowledge on this? I don't think we're allowed to say just yet. Not, but he's got an opinion, we know. Ed Perks with us with Franklin Templeton. Thanks, Ed. Wonderful visit. We're going to continue with Ed Perks here in a moment before Ian Bremmer. I need to do a data check as we get the market open, and it's real simple. What a lift to the market. It's the character of the lift this morning, and you see it on the Bloomberg Launchpad. We're up 20, up 23. It was a Friday, and things were good. And there's just been a persistency to the oomph this morning. Important equity statistics. The NASDAQ up 1.9%, rounded up 2%. Dow, 295 points. SPX was up 40, now up 52 points in the VIX, which I don't rely on here, 15.81. It is the bell of the New York Stock Exchange deep into 2025. Here's John Tucker.
All right, and there you have it, the opening bell at the New York Stock Exchange. Right out of the gate, we are higher, as we have been all morning long pre-market. S&P 500 right now, 59 points higher. 1% lift there, 59.96. Dow Jones Industrial Average is up 295 points. That's a rise of 0.7%. The NASDAQ, the tech-heavy NASDAQ 100, up 368 points. Right now, a rise of 1.7%. Most active in the pre-market was Intel. Intel shares right now, they are up 7.5%. Go to one of the Mag 7. NVIDIA, that is up 2%. JB Hunt, after their earnings report, after the close of regular trading yesterday, 7% lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is the opening bell report. Tom and Damian.
John Tucker, thank you so much. Ed Perks with us, Franklin Templeton. Are share buybacks dividend growth?
No, we really think that allocation of capital needs to be balanced. And, the reason why is that share buyback rarely offsets the growth that's happening elsewhere in the share count. So if it's buybacks and you're actually looking at and seeing shares outstanding decline in a consistent manner, then that's value, I think, delivered to shareholders. But oftentimes that's not the case. Ed, when you're sitting around the table with Todd Brighton and Brendan Circle, and you guys are deciding where to allocate bonds, you think about the global the Bloomberg Global Aggregate Bond Index, the big $67 trillion beast that encompasses all bonds that are investable here. Non-dollar bonds make up 54% of that index. I mean, what's your thoughts on non-dollar
denominated debt in the current environment?
Yeah, I mean, I think for our strategies, it's a bit more difficult. So it's a little bit a higher bar to step outside the U.S. That's not what our investors necessarily are expecting us to do in our strategies. But, it is an area that, we are, particularly on the corporate side, maybe a little bit more attracted to and get involved in. But, once again, those tend to be more multinationals, and we're not playing in kind of just solely in local markets.
Well, the reason I ask that is only because I'm trying to get a sense of what you think about the dollar here. I mean, how much runway does dollar strength have in the current environment?
Yeah, I think it certainly can sustain itself. I'm not sure we'd expect, a ton more strength, but and I do think it's a combination of factors that have really contributed to dollar strength. It's the rate differentials, it's the economic disparity that exists.
There's so many hallmarks here of the Franklin Templeton history, going back to Sir John Templeton and all the work at Franklin. Let me pick today on what was absolutely original and still important, and that is Franklin municipal bonds. Single tax-free, double tax. Is there a Forpal tax-free Franklin portfolio? Does marketing come to you, Ed Perks?
If it exists, I'm sure we have it.
Okay. Tell me about muni bonds underestimated here.
Yeah, I think this is an area where, even though tax cuts are going to be extended, the reality is, it's still very important for a lot of investors and an area to get very attractive, tax advantage yields.
Ed Perks, thank you so much for joining us today with Franklin Templeton, with all of the heritage there going back to, in my case,
I wanted to know if I bought MTA paper, could I offset the
congestion fee? Ed, you're going to have a congestion fee ETF?
That's not a bad idea, actually. We're going to talk to
General
Eric Balchunas about
that. Balance it out.
Well, we'll see. We're going to get a lot of information. And Bloomberg out today with a very careful analysis of the congestion dynamics here in the first week. I looked
no
at
private cars, yeah.
Yeah, it's really
more taxis, no private cars.
Yeah, it's interesting, the taxi lift up.
I love it.
Well, I did not expect.
I'm a convert. I like the congestion tax. It is really, there's nobody on the road. It's unbelievable.
Let me do a data check right now so Tucker and Sassower don't get in a fist fight. Dow up 298 points, 43,400 on the level. SPX 6,000 very near here with SPX up 0.9%. NASDAQ on a tear up 1.5% as well. In the yield space, yields come in. 2-year yield, though the Sweeney yield is a little bit higher, some noise there, but yields churning all in all, and the 10-year real yield 2.18% this morning. Oil, not part of the story today, $81 on Brent crude. Coming up for all of you, steel yourself for this, an intense conversation with Ian Bremmer on his risks for 2025. I'm not going to mince words. It's a G0 world. I've really been anticipating this. We'll bring you Dr. Bremmer without commercial interruption here, and we'll do that here in a moment. On your commute across America, thank you so much for tuning in. And on YouTube, in your home, in your office, I told YouTube on Rivian, what is that about? Stay with us. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We have technology shares pushing stocks higher. Intel most active. This after this report that they're an acquisition target. Shares of Intel up 6.5%. Investors also keeping a close eye in the Xinhua news agency report that President-elect Trump and Chinese President Xi Jinping spoke by phone. So that gave a little optimism around the U.S.-China trade picture. 10 of the 11 major index groups in the S&P 500 pushing higher, being led by consumer discretionary, think Tesla, and information technology. That's home to NVIDIA. Shares of NVIDIA right now, they are up 1.9%. Overall, the S&P 500 pushing higher, up 47 points, 59.84 in the index. The Dow Jones Industrial Average up 315 points. NASDAQ 100 up 288 points, a rise of 1.4%. 10-year yield unchanged, 460. The 2 up 3 basis points. That's at 426. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Damian, Tom.
John Tucker, thanks so much. If I was at Davos, I will not be at Davos. And if Dr. Klaus Schwab's people came to me and said, do a panel, this is the year where I would say, I want to do a panel, but I want it to be just one person. And it would be Ian Bremmer. Every year, he and his team, John Lieber among others, put out a thing called the top risks. And it's not funny. It's a really serious look at where we are going into a given year. And it's remarkably prescient. Some things he gets wrong, but huge amount of, OMG, how'd you do that, like Merkel in Germany years ago. But he's really outdone himself this year, hearkening back to his classic G0 of 2012. Dr. Bremmer joins us this morning. Ian, I'm just going to cut right to the chase. The summation of your top risk 2025 is a reversion to the 1930s. How close are we to the 1935 of Hermann Vauch's Winds of War?
Well, we're close to the 30s. And we're close to the 50s. So in other words, the trajectory is not sustainable. And the question is whether the crisis that's coming is big enough to make us pay attention, but not so big that we all end up fighting each other, right? I mean, in the early Cold War, we had this unfettered decoupling and arms race between the Americans and the Soviets, culminated in the Cuban Missile Crisis. We almost blew ourselves up. And then we started recognizing we needed actually to have some institutions that would create more stability between the two countries, arms control hotline and the rest. You see shades of that, and you also see shades of the 30s with a United States that's incredibly powerful, but is unwinding its own global order. Its own institutions. Right. I mean, you look at things like the United Nations and the WTO, and these are organizations the Americans put in place to coordinate global governance, and that now Americans don't believe in. So it's not clear, but it's clearly, as you say, Tom, this is a definitive moment.
Ian, what's so important here, and I lived this, my grandfather was a textbook Chicago Tribune isolationist of middle America, and you go back to Lindbergh and the rest of them. What is the character of President Trump's isolationism?
I don't think it's isolationist. I think it is strongly unilateralist. And so it's not that the United States is saying we're only going to focus at home. I mean, the Panama Canal and Greenland and Canada comments don't feel isolationist to me, but they're deeply transactional. And in many ways, Tom, what we have is that the Americans are embracing the Chinese worldview that has served China so well over the last 35 years. It's transactional. It's not about rule of law. They don't care what your political system or economic system is like. They will engage with you bilaterally with the intention of being more powerful than you, and therefore you have to play by their rules. And what the Americans are saying is, actually, China, we can do that, and we can do it a lot better than you can, because we're a lot stronger than you, by the way. And that's really what Trump is saying. And it does come at a time when America's adversaries, Russia in deep decline, Iran having lost their empire by proxy, the Chinese in the worst economic conditions since the 90s, maybe the 70s, are particularly weak. So it's an interesting moment to try this experiment. A lot of things are probably going to break as a consequence.
Dr. Bremmer, your Eurasia Group's top 10 risks are required reading at the beginning of every year, and this year's is no different. U.S., China, Russia, Iran, Mexico, I mean, you name it, they're all in there. You know, the one country that I didn't see in there was Syria, and I'm curious to hear your thoughts on what the fall of the Assad regime means for the Middle East and the rest of the world more broadly. I mean, seriously, what role should America play in restoring order to a nation where 14 million refugees were forced to flee their homes in the last, call it 15 years? I mean, a nation whose geostrategic position is so very important to health in Central Asia. What are your thoughts there?
So Syria's there, but it's underneath the number 9 risk, which is called ungoverned spaces. And we include Syria and Yemen and Libya and Haiti and Myanmar.
Western Sahara.
And Sudan, by the way, which is a lot more important in terms of numbers of lives than what you just mentioned in Syria. And yet no journalists on the ground, and they're fleeing mostly to neighboring African countries as opposed to Syrians who go to Turkey and go to Europe. So we don't pay as much attention to them. And that's kind of the point, right? Is that, the danger in Syria, where the Americans had slightly more than 2,000 troops on the ground, and under Trump are likely to remove them and say, Turkey, you mop it up, is that if HTS is incapable of running a unifying government in Syria, which is, a reasonably plausible outcome, then you can easily have a big part of Syria that's ungoverned and would be fodder for a new ISIS caliphate. And over time, not 2025, and this report's for the year, over time, of course, that's something that will wash up on our shores, too.
Ian Bremmer with us here. We're thrilled to have him here to celebrate his top risk. It's a team effort from Eurasia Group each and every year. He'll be with us for a good amount of time. June Grasso to join us here in a bit on this important Chinese social media thing, which I don't understand. Dr. Bremmer, one of the moments that stands in time for me is Ian Bremmer and Robert T. Kaplan with me together talking about a G0 world within Kaplan's Revenge of Geography. What is the most constructive path for moderates in America to get out 4 years, or dare I say 8 years out? What is the initiative that needs to be taken? Do we need to take Kaplan realist policy?
Well, it's not about foreign policy so much, although it is true that a lot of people that decided not to vote, that had voted for Biden last time around, report that Biden's position on Gaza / Israel was a significant thing that turned them away from the polls. And that's a place where Elon Musk and his targeting of very specific and important districts that were swing in the United States could have made a difference. But leaving that one piece aside, and it's not unimportant, of course, I would say most Americans are not going to the polls on the basis of Biden or Trump's worldview. It's more about what they're doing and what they're rejecting at home. And the fact that Trump has become a leader that attracts more working and middle-class Americans because they feel like he's more interested in their well-being. The fact that he was able to get a significant majority of labor union voters in the United States, while Harris was, the candidate for urban, well-educated elites. And that's not a sustainable path for the Democrats, in my view. So they clearly have to reassess a lot of their platform that did not appeal to the average American that did not feel taken care of. More billionaires put money into Harris's campaign than did Trump's. That tells you something.
Dr. Bremmer, the U.S.-China relationship's at the forefront of geopolitical risk in the current beta regime. Yet if we do see something like 60% tariffs, do you really think that China's going to allow the yuan to debase itself again? And if that does indeed occur, do we feel there's a clearing price in dollar yuan where the market can go to that can still allow China to grow at 5% per year?
I don't expect China's going to grow at 5% per year over the coming several years. I think they've got deep structural problems that are being made worse by the fact that the only part of their economy that is overperforming is their manufacturing export, which feels like dumping. It's $1 trillion surplus, and it's upsetting lots of countries around the world, not just the U.S. The U.S. is leaning into hitting back, which will occur with tariffs, though it won't be a 60% number. I mean, the top line election campaign numbers are never the numbers we see. But even if it's 25%, which I think is more plausible in the early weeks and months, you're not just talking about U.S.-China. You're also talking about the Americans squeezing other countries. We've already seen this with Mexico. We will see it with India, with Southeast Asian countries, for acting as a pass-through of Chinese exports to the United States. So it's very hard to imagine that U.S.-China relations are going to maintain the comparatively well-managed, sort of incremental decline that we've seen in the last year and a half under the Biden administration.
I want you to sit on this question, Ian, because I think it's so important to all of our listeners and the people that, enjoy so much your international relations. This harkens back to the fear of the first week of August, 1941. A bunch of boats sitting off eastern Canada where Roosevelt and Churchill tried to begin to piece together the post-World War II world. And they were humbled by two major wars. The thing out there, Dr. Bremmer, is the only way this is going to get solved is the humility of a war. Discuss that. Is that what it takes to get away from the madness we're living in right now?
I think in the near term, we're talking about damage control. We're talking about countries and companies on defense. So, a lot of them are hoping that they just don't make headlines. Others are trying to figure out what they need to do proactively to kiss the ring. And geopolitically, you're going to see a whole bunch of countries acting the way Mark Zuckerberg has in the last week towards the commander-in-chief and towards his bomb thrower-in-chief, Elon Musk, by far the most powerful person around the administration, if I can call it that. Look, I mean, the way that you respond to a G0 world is either you reform and strengthen your existing institutions so they are more fit for purpose. You build new institutions that better reflect the demands, the opportunities, and the concerns of the present age, or you go to war. And I can give you examples of all three. All three are happening. We are strengthening NATO right now. We are creating new institutions, the Quad. The Chinese are building Belt and Road and the BRICS, and, there are other examples.
Right.
But the most energy is going into more conflict. The most energy is going into more war. And again, that is not geopolitically sustainable. So I think, your advice to other countries right now, given the power imbalances and Trump coming in and how consolidated his authority is inside the United States compared to 2017, where, he was riding the Republican Party's coattails, his administration felt very different. Not this time around. He's the guy, is that they have to recognize they're playing defense. And defense is more effective in depth. It's more effective if it's strategic, if you're not just, reacting to the latest headline, and it's more effective in numbers. In other words, the EU is better off than, say, the Mexicans because they can act collectively. And to the extent that other countries are capable of doing that in defending the things that matter to them, both in their own countries, but also in terms of international architecture, we will all be better off. By the way, Trump is going to get a lot of wins in the next year. But unlike Xi Jinping promoting a Chinese worldview, Trump doesn't get to do this for 20 years. He gets to do it for 4, assuming he's in good health. And then he doesn't anymore. So long term, the United States unwinding its own institutions does not strike me as strategically smart.
Okay, got to leave it there. Ian Bremmer, congratulations on the impact, the effect of your top risks for 2025. Of course, Dr. Bremmer with Eurasia Group, and I think it'll be a source of great conversation here. The completeness of the moment we're in is captured by that study of the 10 items. I mean, you can pick your item, and you've got a favorite and all that.
And it's so U.S.-centric. I mean, more so than I've seen in recent years.
Yeah.
I mean, it's all about the U.S.-China relationship, but I mean, sprinkle in a little Russia, Iran, and Mexico there. So But, I wonder if Dr. Bremmer's picked out his outfit for Davos yet. What do you think? You think he's already done that?
Nice styles. I mean,
he does, doesn't he?
He does, he does. There's no question about that. We have some headlines out here right now, and this is the leadership of China, maybe listening to the show. I'm kidding. Mr. Xi, essence of Sino-U.S. ties is a mutual benefit. Differences with us, quote, inevitable. Key is to find appropriate solutions to problems. The leadership in Beijing says China-U.S. can become partners, friends. She hopes U.S. can deal with Taiwan matters carefully. And let me reread that because that's the money headline. President Xi hopes the United States can deal with Taiwan matters carefully as well. Joining us now in a deep matter, June Grasso's advised me to stay off of TikTok. I took her advice. Am I going to start TikTok on Monday? What do you think?
Well, there are several members of the Senate and Congress who are on TikTok, so I don't think you have anything to worry about as far as that. However, if nothing happens with the Supreme Court on Monday, apparently TikTok will go dark, according to what we know from its parent company.
Do we see that here in 4 minutes? Is there like some headline that's going to come out?
Well, in 4 minutes, 5 minutes, 6 minutes, 7 minutes, 10 minutes, the Supreme Court is likely to issue a ruling. They had those oral arguments last Friday.
The U.S. Supreme Court.
The
not
U.S.
the China
Supreme Court.
Okay,
is there a Supreme Court in China? I guess so. Yeah. So my expertise does not go that far. Anyway, the U.S. Supreme Court is expected to rule today. It's an emergency matter because if they don't rule today, their ruling will be basically, not worth much. So we expect there will be a ruling. 10 o'clock is the time they've set to issue ruling, so that's why we're expecting it. But you never know, Tom. I won't say definitely.
Well, June, what is the law requiring ByteDance to do? Are they just simply taking Google and Apple down from the App Store? I mean, do they shut it down completely? Are they supposed to leave the country? I mean, what does this ruling really mean?
Well, what it does is, and it depends on what the Justice Department does. So, example, if President-elect Trump, when he comes in, decides that he tells the Justice Department, I don't want you to enforce any of the bans against TikTok, then it would be up to the various platforms that support TikTok, Apple, Google, et cetera, whether they want to continue to support it. But with the amount of the violations, like $5,000 for each violation, it's unlikely that Apple and Google would continue to support TikTok.
Senator Schumer of New York out with the headline, should keep working to find American buyer for TikTok. Where's the legislative branch in all this? I get the Supreme Court stepping in. I guess Biden and Trump have an opinion. Is there a belief among Republican majorities in Congress?
Yes. Well, this bill passed overwhelmingly in both houses.
Overwhelmingly?
Yeah. There's the Republicans and the Democrats believe that this is a national security threat, even though there is some kind of secret evidence that hasn't been revealed, that we haven't seen.
Why are our presidents, and the time I got June, I'm sorry, it's not like June Grasso. Right. June Grasso, whenever she's on, it's commercial free. I'm sorry, we know. June, why are our presidents pushing against the bipartisan belief of the legislative branch?
Because, not presidents, because Biden is not, because where has it been proven that ByteDance is spying on Americans? There's absolutely no proof that we've seen the public that this is happening. And so I think that, and also as President-elect Trump said, he has one of the biggest, most hits on TikTok, something like that. So that's why he wants it.
President Trump is on TikTok.
Yeah. Yes, and so is President Biden's election campaign was also on TikTok. I mean, this is why.
We now go to our surveillance authority on TikTok. Alex Steele has entered the salute. Alex, you were like me. We looked at it and said, are you kidding me?
What's TikTok again?
Yeah, I'm kidding.
Ask Dylan who TikTok is. My Hayden also.
No,
I mean, they've been
allowed.
kicked
She's
off
only
twice.
10.
Hayden Sassower has been on TikTok, gotten kicked off twice now. twice now for pictures that were too unsavory.
So are you pro or against TikTok, Damian? It's all the world wants to know.
Let me tell you something. I have to be pro because my wife would kill me if I'm not. She lives for TikTok. So I'm just Mrs. Sassower gets her news from TikTok.
I think wait until Monday if the platform goes dark when 170 or so million Americans contact their representatives.
Treasured. Thank you so much. And it'll be an active year for June Grasso and the law of the land. What a week. Thank you, David Gurra. Thank you, Damian Sassower. Always Tom Petty.